remove Matt. Oh, Matt is there. Hello, mister.
I'm just joining in a second.
Okay.
Yeah. But by the way, I'm trying a new internet. So if I'm if there's anything wrong, I can switch to the old usual one. But I should have an upgraded internet. Yes, double beat. Okay. Do you want to?
I'm not seeing it on the website, but I'm not sure where people are seeing this.
Our
It's out
audience
somewhere.
Can someone send us a link where you see this alleged double beat? Our audience has Bloomberg terminal, you know?
Yeah.
EPS.
Oh, yeah, go ahead.
No, I'm reading the comments. EPS minus 7 cents.
And I'm seeing revenue of 200.3 million versus 189.4 million, so a 6% beat. Earnings per share 42% up year over year, 22% up quarter over quarter. Revenue is up 63% year over year, 12% quarter over quarter. Man, that's a good start.
Yeah. You want to share your screen?
I'm just reading something off Discord. Somebody sent that, so I hope that's legit.
I tell you, it's our audience. Everybody has what is it called? The terminal.
Oh, yeah, Bloomberg. Yeah.
Yeah.
Oh, let's see.
By the way, we jumped right into it, so welcome everyone. Please let us know in the comments from where you're watching. Thank you so much for being here. We are going to have Matt here and Miss Iglesias.
Nice.
And we're going to have a lot of fun. That's the plan.
Mm-hmm. Here we go. I think I got something. So we got the press release and the presentation. Do you want me to share my screen?
Sure. We can.
Okay, let me. That one should be the one we're looking for.
Good.
All right. So, do you guys want to do the presentation or just the release? Maybe we'll start with this one, hey?
Sure.
Okay. Rocket Lab has delivered another exceptional quarter with record financial performance of more than $200 million in revenue, consistent execution across launch and space systems programs, a record number of significant new contracts signed, and strategic acquisitions secured. Rocket Lab exited the quarter with $2.2 billion. That's crazy because when we got that, what was that, a 15 batch? Yeah, they said $2 billion. So they've just brought on another $200 million, I guess, somewhere in backlog. And they currently have more access to more than $2 billion in liquidity, putting them in a very strong position for continued growth and M&A execution. Rocket Lab continues to lead on execution and growth. They completed successful orbital launches and hypersonic test missions, introduced new space systems products, including the highly sought-after Gauss Satellite Electric Propulsion System, have been selected to support the Department of War's space-based interceptor program. That might be what that rumor was from yesterday. Under Golden Dome for America right there. Under Golden Dome for America in partnership with Raytheon. Beautiful. And expanded our leadership role in hypersonic test launch with a record contract under the Mach-TB program. Rocket Lab also closed the Mynaric acquisition to establish the first European footprint within Rocket Lab Europe and entered into a definitive agreement to acquire Motive, adding Mars-proven robotics heritage to our suite of capabilities, while also insourcing costly and supply-constrained spacecraft components, including solar array drive assemblies and other precision mechanisms and motion control systems. Rocket Lab's tailwinds are strong. We're already embedded in the most demanding and significant space programs of our generation, and we're in an incredibly strong position to continue expanding this. First quarter highlights: record quarterly revenue of $200.3 million, a 63.5% increase year over year. Record GAAP gross margin of 38.2%. Wow.
GAAP also.
Yeah.
GAAP. Wow.
Yeah, that's wow. That's phenomenal. Record backlog of $2.2 billion, up casual 20% quarter over quarter. Record liquidity following completion of at the market offering with access of more than $2 billion in liquidity strongly positioning the company for further organic growth and M&A execution. Record new launch contracts with 31 new Electron and HASTE contracts signed in Q1, plus five. Am I reading that right? 5 new dedicated Neutron launches signed. I wonder if that's one company. Rocket Lab has now sold more launches in Q1 2026 than in the full year 2025. That's wild. Demonstrating
that is wild.
Strong continued demand and growth for the company's extensive launch capabilities. Rocket Lab's total launch manifest now exceeds 70 contracted missions. My goodness. Completed the acquisition of Mynaric AG, a leading provider of laser optical communications terminals for air, space, and mobile applications, which further strengthens Rocket Lab's extensive capabilities as the supplier of satellite components at scale to the global space market. Signed a definitive agreement to acquire Motive Space Systems, a leader in space robotics, motion control systems, and precision mechanisms for spacecraft. The acquisition will achieve 2 strategic objectives for Rocket Lab: add Mars proven robotics capability for advanced planetary and national security missions, and closes a critical gap in Rocket Lab's vertical integration strategy by bringing in-house costly and supply-constrained satellite components like solar array drive assemblies and other precision mechanisms. Rocket Lab was also selected to directly support the Department of War's Space-Based Interceptor program, a critical element of President Trump's Golden Dome for America, in partnership with Raytheon. Rocket Lab's launch and satellite capabilities are both being utilized for SBI, demonstrating the value of the company's agile and cost-effective end-to-end space capabilities for the warfighter, and positioning the company to capture significant revenue from what could become the U.S. government's most important national security program. Rocket Lab also introduced Gauss, a new electric satellite thruster designed for high-volume production to meet the growing demand of reliable satellite propulsion across commercial and national security constellations. Rocket Lab achieved significant milestones across the Neutron program, with ongoing integration and readiness of first flight hardware, continued progress on Archimedes engine qualification, and advancement of the second stage and reusable fairing systems, positioning the medium lift launch vehicle on track for its debut launch later this year. Second quarter guidance revenue. As if the 200 million wasn't good enough, they're guiding for 225 to 240 million for Q2. GAAP gross margins are still going to be in the mid 30 range, 33 to 35%, with non-GAAP being 38 to 40%. GAAP operating expenses between, we'll call it 140 million, with non-GAAP being around 125 million. Interest income, net 12.5 million, adjusted EBITDA loss of between 20 million and 26 million. And then the common shares outstanding of roughly 629 million, including approximately 46 million of Series A convertible participating preferred shares. Gentlemen, how are you feeling so far?
Amazing.
Yeah, I'm liking what I'm seeing. That 5 Neutrons signed, that's crazy. That's a phenomenal win.
If only there was one of us who was betting that we will see block Neutron contracts this year in our yearly.
Yeah, if only.
If only. I'm super happy to see that.
All
You
right.
see, it. I just want to say that this a bit validates Sir Peter Beck's, because like if you look at other companies like Astra and Firefly, who has incredible backlogs, but the vehicles keep blowing up because of whatever reasons. Maybe they're rushing it, and then the backlog evaporates. And I see this logic that, okay, let's be more conservative. Let's get an amazing product, and then these block contracts, like you will get everybody's backlog except for the Falcon 9, you know, because you're the only reliable partner. Yeah.
All right, let's get into the actual presentation here. End-to-end space technology, it's kind of highlighting launch being broken into Electron, HASTE, and Neutron. Spacecraft being broken into the family, so Explorer, Lightning, Pioneer, Photon, and Flatellite. And then the subsystems and payloads, which just continues to expand every quarter, it seems, and continues to expand with this Motive acquisition. You have space solar separation systems, optical payloads, optical communications, electric propulsion, flight and ground software, star trackers, reaction wheels, and radios.
Scott, do you know what we need to do once? We should make a table of like all these pictures that you see, and like what is their announced capability, and like how much is that in dollar value? Because I think that there is on some of the announcement, it's crazy numbers, like how much reaction wheels they can do, how much solar panels they can do, the gas thrusters, and yeah.
It really adds up. Yeah, really adds up. Looking towards capability, they are highlighting launch again, technically responsive launch, dedicated small satellite launch.
They just tweeted a Andro. Sorry to interrupt. They just tweeted an Andro partnership. That's pretty crazy.
Who did?
Rocket Lab.
Wow.
No way. Welcome, Mrs. Iglesias. How are we doing?
Hey, good. Thank you. I haven't seen anything, so let's see. I'm excited.
Okay.
It's pretty good. It's pretty good.
Yeah.
High level, we have a new acquisition, Motive. It seems very Mars flavored. The Raytheon rumored partnership is legit. And as Matt just pointed out, apparently we have an Anduril partnership as well.
How exciting.
And we have
hypersonic test launches on HASTE.
Sorry, say again?
Yeah. It's
3x hypersonic test launches on HASTE.
Wonderful.
With Anduril. Yeah, it's crazy.
Do you know, does it say when those were signed?
Sorry, what was that?
Does it say when they were signed by chance?
No.
No. Okay,
it doesn't.
Okay. And then Mrs. Iglesias, we have a, I'm assuming it's a bulk order of 5 Neutron launches as well.
Very cool.
And launching within 2025 being reiterated. So off to a very good start.
You mean 2026?
Yes, I do mean that.
It's exciting. It's exciting. We lose track of the year. It's fine.
But just to come to Scott's defense, 2025 was also reiterated many times.
Yeah.
Yeah. Okay.
Yeah.
That's so cool. Yeah, I haven't had a chance to take a look at any of the updates. Let me open up my X on this side.
Cool. And then turning back to capability here. I mean, I'm not sure if we need to read all this stuff. I think anybody watching the stream is pretty familiar with what Rocket Lab does. So they're just kind of highlighting their capability between launch and space systems. Next, returning to end-to-end execution. So NatSec and Defense is highlighting Golden Dome space-based interceptor, National Security Space Launch, PWSA, the Tranche 2 transport and Tranche 3 tracking layers, MACH-TB and MACH-TB 2.0, tactically responsive space, and classified missions. For civil, they're highlighting Artemis 1, 2, and 3, ISS commercial resupply missions. I wonder what they mean by that.
Yeah.
Oh. Mars missions, Escapade, Innovative Satellite Technology Demonstration Program, Celeste, LEO, PNT. I think that's the ESA one that launched in Q1 sometime.
The European one. So with Artemis, we knew they were supplying the solar arrays, right? I wonder if that's going to continue and what the resupply mission thing is.
Mm-hmm.
If only we could speak to these guys and ask them.
If only.
Yeah, if only.
Well, hopefully a lot of these things will be answered. Did you share the news already with the folks?
No, it's still a secret. So.
Oh, so
What news?
I'm not sure why we kept it a secret. Like, why did we decide that?
I don't know.
All right.
Now we have Rocket Lab Robotics. Is that okay? Continue.
Yeah, for commercial, we're looking at direct-to-device constellations. Interesting. Earth observation constellations, lunar landers and orbiters, and Earth re-entry.
Oh, lunar landers. I know Francisco was hoping to hear something about that.
Me too. I wonder if that's, we're going to have to circle back to that new acquisition because that's, I wonder like what kind of robotics that's alluding to.
I don't know. All of this sounds mad exciting. I'm super excited. All right. Largest launch contract of 5x Neutron launches and 3x Electron launches. Oh, okay. So new launches signed.
Whole bunch of new launches. Yeah. So the record revenue, 200 million, up 36%, 63%, excuse me. I think the stuff we've all kind of gone over, that 31 Electron and HASTE missions, that's just mind boggling.
I mean, you realize if this trend continues, there will be like 120 Electron launches per year.
Like that's yeah, man.
I mean,
That
just
is
like
nuts.
2 years ago, we were like, oh, are we gonna make it to 12? And now here we are. That's so great.
I literally remember an interview when Adam Spice personally told us that they don't see demand past 30 launches per year.
I went over that last night. Yeah, I saw that.
Yeah. Yeah. And now they sold 31 in a quarter. Yeah.
That's crazy.
All right. So moving into Electron and Haste, record quarter, 31 new launches booked in Q1 2026. So 8 successful launches year to date. They anticipate beating last year's record of 21 missions. I think north of 25 is probably a safe bet at this point.
Yeah.
Knock on wood, of course. 70 plus launches in backlog, highest in Rocket Lab history by quite a bit. I think last quarter we ended, I think it was around 50, I guess, if you just do the quick math. 100th launch on track for this year, expected to be the fastest rate in commercial launch history. I think this is a safe bet as well. I'd say we hit this probably late Q3, but maybe Q4. So yeah, it's going to be an exciting launch.
I want to know if we're gonna have like a party or something. The
I should hope
50th
so.
one was super exciting, and I remember the special edition T-shirts and all that. So I wonder what we're doing for the 100.
Yeah.
For hypersonics test supremacy, record haste contract with the Department of War. This is the 20x launch contract, which is worth $190 million.
Calm down. Woo!
I know, a little excited.
I was about to just walk out and quit my job.
So that's that mock TB 2.0 order in Q1 cements Haste as defense and test category leader for the Department of War. Like, understandably, like if looking at the competitors, what are the competitors? Like 50 million a pop, if I'm not mistaken. And I think that's being fair. So Rocket Lab coming in with 9.5 million per launch. That's, man, that's just crippling for competition. Largest order yet within mock TB program, demonstrating the Pentagon's confidence and reliance on Haste. Very cool. Yeah, that's going to get real busy at LC2 there.
That's so exciting.
Here we go, Maddie. Rocket Lab and Anduril partner on responsive Haste launches.
That's crazy.
Rocket Lab and Anduril are teaming up to deliver new hypersonic capabilities for the U.S. national security. 3 Haste launch contracts signed. First direct commercial Oh yeah, I guess it would be. Yeah. First direct commercial partner for Haste.
They've all
launching
been
within 12
government
months.
so far, right? I thought we had one commercial Haste in there before. For that Australian company that
yeah, that's a good point. Wonder how that lines up.
I mean, it's funny how because technically, like the Department of War Haste launches are also via another company, as far as I understand. Like the Department of War didn't like hire Rocket Lab to do the launches; they hired someone else who hired Rocket Lab.
Oh, okay, yeah, I see that. So the hypersonics one, I guess, would technically be Defense Innovation Units, which would be like Department of Defense. So yeah, technicality, but we'll give it to them. And yeah,
good news either way.
Absolutely. And those will be launching within 12 months, which is pretty much the speed that you'd expect a partnership like Anduril and Rocket Lab to operate at. Cool. Moving into space systems. For Golden Dome, Rocket Lab has been selected for space-based interceptor program. Raytheon and Rocket Lab have been selected to demonstrate advanced capabilities for the U.S. Space Force's space-based interceptor program. The program is an important step in strengthening national missile defense capabilities. Raytheon and Rocket Lab are contributing proven expertise to advanced development of effective solutions for this urgent security need. We stand ready to deliver.
So question, if I translate this correctly, it means that they are being paid to do like a demonstration mission, and then should that go well, they get a very big juicy contract.
That's I think that's a safe bet.
Yeah,
I think so. Now this deal was it 3.2 billion amongst those, was it 6 selected providers?
I'm not sure.
I think it was like the top like legacy players like Northrop and SpaceX and Lockheed and Raytheon. That was the one post that everybody was like, "Oh, Rocket Lab wasn't included in this one," but I was hoping that one of those legacy players would partner with Rocket Lab and potentially use some of the space system stuff.
Mm-hmm.
I'm really interested to hear the bottom line on what this deal is.
Mm-hmm. Here we go. So the new acquisition, robotics and space mechanisms. Space-proven robotics, adding Mars-proven robotics to our end-to-end space capabilities, commercial Mars sample return, lunar and planetary surface operations, on-orbit docking and spacecraft servicing, optical systems solutions. High-value space mechanisms, bringing solar array drive assemblies and other precision mechanisms in-house, strengthens Rocket Lab's vertical integration to reduce costs, accelerate production, and provide greater control over quality and performance for our own satellites and our customers' constellations.
Awesome.
So what do you guys think this turns into? Is this going to be landers, or is this is different than that?
I'm thinking it's what goes inside the landers. Like, I don't know.
It has to be, because where else do you? What is like? Would the solar arrays opening, does it count as robotics?
I don't know.
Well, if only we could ask them.
All right, moving to Gauss, in-house developed electric propulsion system tailored for high volume production. Electric propulsion thrusters have long been difficult to source in high volume, causing supply chain issues for commercial and national security constellations. Gauss solves this. 200 plus unit production line already established. And in that interview with Madison, Peter said it was just
for them.
Pretty well. Well, yeah, like I think he said like not entirely for them, but it sounded like it was pretty much entirely for them, but that they could also like scale it no problem, which is pretty unsurprising given their track record with the reaction wheels and how they've been able to spin that business up. Enhancing end-to-end space systems economics with high value, globally in-demand product that is expected to drive revenue and margin upside. Cool. So, I mean, like just based on that alone, we kind of did the rough numbers in terms of revenue, but this kind of gives us an outline of what to expect for margins as well. Just given that how that's phrased right there, I think it's safe to assume that's going to be we'll call it between 20 and 40% margin is probably a safe bet.
Yeah, I think Madison had asked him about cost per unit, and he had said it's in the hundreds of thousands, depending on the modification that each unit needs. It's a whole system, I guess. But I mean, that promo video, can we talk about that? That was awesome.
Yeah, that was so cool. Very well done.
Yeah.
I just like, for me, that when the engine fires and then it's like almost like a silent sound, I wanted to make a video like, I fix it for you guys and then put like the Archimedes engine sound, under the. Yeah, but I didn't get around to it.
No, it looks great though. I was very excited about the video.
Yeah, Scotto, what you said, that like the margin has to be 20 to 40%. Like 20% would be margin destroying at this point, because we have 38% gap margins. So if
I'm being conservative here. Like realistically, it's probably 30. Yeah.
No,
maybe.
30 is destroying margin. It says that it increases margins. 30 is low margin currently, like how the reports are.
Yeah, I guess so. I'm being way too conservative then. Yeah.
I mean, I'm just saying they said it will increase margins, and 30 would decrease currently.
That's fair. Cool. For space systems execution, our latest products, electrical propulsion, optical payloads, laser comms, silicon solar, star tracker, robotics coming soon, and precision mechanisms. So I assume those both coming soon. Those must be coming from Motive. The Star Tracker, this is the high performance, kind of like rad hardened version of the Star Tracker they've been building for, I think, decades at this point. Silicon solar, like this stuff's all pretty much brand new, and a couple of these in-house as well. So if it's not acquired, they're just building it themselves. In just 4 months, we've added 7 new high-value strategic products and capabilities through acquisitions and internal product development, deepening the bench of our vertically integrated technology stack. I'm no expert, but like I'm running out of things that Rocket Lab needs anymore. Like,
I think that's the goal. I think that's endgame.
yeah, really.
Everything that goes to space.
Mhm. Rocket Lab Europe, open for business. Mynaric acquisition now closed. Rocket Lab is establishing their first European footprint. Rocket Lab's access to Mynaric's laser optical communication terminal adds a high-growth technology layer to our space systems business. What now? Focused on scaling Mynaric's products to meet national security and commercial demand in Europe and the global industry. One thing that has been on my mind regarding Mynaric is if you go on their website, there is the whole space side of the business, but then there are like manned aircraft, unmanned aircraft, even like vehicles and just like camps, I guess, like establishments that are highlighted. So I wonder what that could mean for Rocket Lab going forward, because obviously they're going to scale for satellite constellations, but I wonder if they're like kind of looking at it almost like Redwire, where it's, you know, a lot of space companies start at 500 kilometers above the Earth, but if you're Redwire, it starts pretty much as soon as you get off the ground. It's going to be interesting to see if Rocket Lab does kind of fill in that communication layer in that like 0 to 500 kilometer range.
Yeah, I'm looking at their website right now.
Somebody says there are some whispers that Neutron contractor could be Amazon. I mean, that would be amazing.
Mm-hmm.
Then we will have a reaction wheel contract and a launch contract.
Yeah, let's go. I guess the only way we'll know if it's Amazon for sure is if Rocket Lab just never announce it.
That's true. Or if he says a math.
We're going to know on this earnings call based on how they navigate the question.
Yeah. So 5 new launches signed. So it is a bulk order. So that is just the one customer. That's awesome.
I'm also wondering if it's ASTS.
Could, yeah. Especially after that Blue Origin thing.
Blue Origin thing, yeah.
Yeah. So through 2029.
Which again proves Sir Peter Beck's point, how it's better to be late and have a perfectly working rocket than blowing up your customer, because then you suddenly lose the customers. They go into other rockets. Somebody's asking about Meta, and that was it was fake news. It was some AI slop something.
Oh, really?
As far as we know. As far as we know, there's no partnership with Meta.
So I'm just doing the quick math because I'm just going by that like 1358 cadence. I'm just trying to stack up like where exactly this fits, because
it's many years ahead.
Yeah, like how many launches do we have now? We have like two and a half, if I'm not mistaken, right? And then I guess 7.5 now.
And plus the test. I think it's 1 test, 2 customers and a half, and then 5 of these launches.
Okay, so we're filling up already through the rest of the decade. Like, damn, great news. And I think this is a huge testament. Like, this is something we've talked about on the weekly plenty, where like it didn't make sense that Rocket Lab's just bringing in all these customers so that you don't firefly yourself into like, oh, we have 70 contracts. Oh, but actually they're only 50, or was it 70 to 50, or either way, they like brought down that number by like 20, which you can only assume means they're going to other providers. Because they were signed way too soon. They kind of basically brought on too much demand for what they were able to supply, and it kind of, shot themselves in the foot. And they're still like Firefly is still working off those launches that were signed at a discount now. So it's just many years later, and they're still trying to churn through that backlog. And I think this is very telling for where Rocket Lab are at in terms of like being ready for Neutron to hit the ground running.
It's almost as if Sir Peter Beck knew what he's talking about.
Almost.
Almost. Yeah.
I'm gonna sign in. I haven't signed in, I guess. It might drop me for a second. I'll rejoin if it drops me.
Yeah, all good.
No problem.
So the Neutron deal includes. Wait, what? Hold on. The Neutron deal includes 3 Electron launches, and brings our total manifest to 70 plus.
I'm so curious now. Who's the customer? Like, who needs 3 Electron launches and 2. It must be like a constellation, and then it's 3 tests, and then depending on the test, then they're launching the big no?
That's what I would take it. Yeah, I'm wondering, how heavy are? Does anybody know in the chat how heavy are Amazon satellites? I wonder if that even lines up. I don't know if we're looking at Kuiper or Leo.
Leo, yeah.
I think that would be too heavy for Electron.
And for them, it doesn't they're not in the testing phase. Like they don't need to send an individual satellite up. So it must be someone else. Equitas or whatever it is.
Yeah, because that's which bus is that on?
Vias. Francisco is on the same.
Yeah.
Viasat, Equitas. Yeah. And
I think that lines up. What is Viasat, the original? I know it's like not connected directly, but Viasat's already working on a satellite bus with Rocket Lab. That's the Pioneer bus. So maybe it's launching a Pioneer bus. Is that too heavy for Electron though? I don't know. Oh, 800
maybe that's
kilograms.
the 500 kilogram Electron. That's
heard
is.
Okay, so yeah, I'm seeing first gen Project Leo satellites are 600 to 700 kilograms. I'm also seeing somebody mention 800. So too heavy for an Electron is our answer. Could be like a
Equitas, I think, also has to be too heavy because like I think if you're not sending up 10,000 satellites, which it sounds like, I think their constellation is 2,800, then you need to have bigger satellites that cover more. And I would be surprised if those go on Electron.
I mean, and to really put a tinfoil hat on, like I see Francisco, you're asking about the Electron lifting heavier payloads. Maybe. I mean, that we have that rumor, and then we kind of dismissed it, but then there's a little bit more credibility in that new interview about HASTE being able to lift twice what it used to be able to. That maybe that's payload dependent, whatnot, but that's interesting.
Question.
Yeah.
What if it's on drill? They just signed 3 launches.
Well, as soon as I saw the 3 launches, I'm like, maybe that's it. I don't know.
Yeah.
And that wouldn't surprise me. That feels like that's on brand with Rocket Lab. Just leave a little breadcrumb behind, and then we'll be looking at this years later and be like, oh, it was right in front of our eyes the whole time.
Yeah. No, but I think that would be called HASTE. It would not say Electron. It would be HASTE.
Good point.
Three HASTE launches.
Yeah. Okay, maybe. Yeah, I don't know.
Well, I guarantee you, people are going to ask it on the who is this, and then let's see how they tiptoe. But I think the fact that it includes 3 Electron, it's for sure not Amazon. It has to be someone that is trying something new, and then they mass produce it with neutrons.
I'm seeing a couple comments. The talk about extending the Electron to carry more weight, I think that might be the Neutron that you're thinking of. The Neutron will be able to be extended and thus carry a heavier load. I'm not sure to what extent, if it goes from 13 tons to 14 or what they can eke out of that. But yeah. Spundrob, I hope it's an Electron heavy. I know that was I think that was an April Fool's joke from many years ago, but that would be funny to see.
And I think Dave had made a little image with it attached, boosters attached on the side.
So since it's a huge secret, somebody's asking what day are we speaking to management? So if it was today after the earnings call, I would not be allowed to say it.
So you mean immediately after?
Maybe an hour after.
Okay,
so, I cannot say it.
So, we definitely wouldn't.
Yes, we can't say it. So if you guys have any questions, you can still give us ideas and see if we can sneak them in.
So for Neutron, we're looking at stage 1 tank updates. Stage 1 tank components are coming off the AFP machine in preparation for assembly, integration, and upcoming test campaign for Flight 1. Stage 1 tank is currently tracking to an aggressive timeline that supports first launch this year.
But you see now it's an aggressive timeline.
Yeah, that's
the the wording is changing, because before it was like, yeah.
Yeah, I wonder how aggressive.
Yeah, because I felt like before it was like a for-sure timeline, and then it has gone back to this. It's a rocket program, you know, and yeah.
So for stage separation testing, separation testing with stage 2 interstage and fixed fairing test articles is underway. Releasing stage 2 from inside stage 1 is an architecture unique to Neutron that supports the full reusability of the rocket's main structure and permanently attached Hungry Hippo fairing halves. Testing parallel to the rocket's development means we approach Neutron's first launch with more certainty, ensuring a robust, reliable vehicle is brought to the market. That's cool. I wonder like what all that stuff is, if that's just, oh, can't bring that in. I'm trying to zoom in here.
Francisco, the last one looked like they went to the junkyard for parts. Compared to these, I agree, actually.
That's a great picture, the one with the sky in the background.
Yeah.
This I like this view too. I don't know if you guys can see those little pixels there, but those are humans, to kind of give you a sense of scale here.
Yeah.
Whoa.
Yeah. Man. Wow. So the Neutron interstage qualification. Undergoing qualification testing, Neutron's interstage is a key feature connecting the rocket's upper module and reusable Hungry Hippo fairing with stage 1 and stage 2. The carbon composite interstage is being tested beyond maximum expected flight loads in line with our standard qualification process. After qualification comes integration of its flight, avionics, and fluid systems before it's shipped to Launch Complex 3 for further assembly.
So I wonder if the intention is to continue to make these out there in Warkworth and then shipping them out here.
Landing barge development. Significant progress for the return on investment Neutron landing barge with forward and aft deck houses installed. Power generation systems and thrusters are delivered, ready for installation. I think last we heard on this, I think it'll be ready by year end, if I'm not mistaken. It won't be used by year end for that first launch, but it'll be ready to be delivered to Rocket Lab by then.
Did you guys see the New Glenn, the last landing, that it like went down next to the ship, and then I think that they ran some tests, and then it like hovered over the ship and landed. And I was thinking, like, can't they do the same thing? Because the barge will be almost done, and then
If it's going well, then they decide to like move it in.
yeah.
Or, hear me out, guys, that's where the Neutron first launch party is.
On the barge?
Middle of the ocean.
Yeah.
Neutron crashing right beside.
Like
what could go wrong?
What could
Seems
go
like
wrong?
a safety hazard, but it's exciting. I'm in.
I'll sign a waiver.
Yeah, me too.
Parallel development of return on investment will ensure Neutron enters swift reusability after first launch. Sea trials are expected later this year. Okay, so not just like being delivered, but already being tested later this year. That's cool. It's a big boat or barge. I don't know if you call it a boat still. It's a huge unit. How are we doing for time? We've got about 10 pages left in 15 minutes. The call's at 15, right?
Yeah. 15 minutes.
All right. Advancing towards first launch. Stage 1 engines, extensive testing underway towards qualification. For the thrust structure, integration is underway. Stage 2 engine, extensive testing underway towards qualification. Stage 2, integration underway. Payload support structure, qualified and ready to ship to LC3. And for Hungry Hippo, integration is underway. Beautiful.
Somebody suggested in the chat that we can just rent our own boat. Well, we don't want to be that boat.
Yeah.
With the launch.
When
Imagine
they say
all the
range clear, and they're like, no, hold.
All right, we're getting into the financial highlights and outlook. All right, so revenue of $200 million. Revenue increases 63.5%, or $77.8 million year on year, driven by an increase in launches from 5 to 6, as well as growth in our space systems business, driven primarily by increased contribution from SDA Tranche 2 and Tranche 3 contracts and our components business. Tranche 3, that's just heating up. That's going to uptick a pretty significant amount over the next few quarters. It's also worth mentioning this revenue increase, this does not include Mynaric. Mynaric closed, I think, April 13th or mid-April, we'll call it. So that's all going to hit within Q2, not the entirety of the quarter, of course, but that's the majority of the quarter. And then depending on where Motive lands as well, we're going to start to see that revenue in Q2 as well. So it's, revenue is just going to continue to get better and better.
I think it's just music, Francisco said.
Okay, cool. For sequential revenue increase of 11.5% quarter over quarter, or 20.7 million. This is driven by an increase in our satellite platforms business, paired with growth in our components business, particularly our solar business unit. That's really cool to see. I think Solero is going to be huge, like to the extent of what we saw with Sinclair Interplanetary, where Rocket Lab went from, I think, I don't even think it was a couple hundred of reaction wheels per year to now being capable of multiple thousands per year. I think we are seeing that exact kind of pattern with Solero, and not even just with Rocket Lab's own capital, but like the state itself. I think as well as a federal program have also contributed to building up Solero. So it's like true Rocket Lab fashion, having R&D being paid by others for the company. It's a beautiful setup. Year-on-year GAAP gross margin increase was driven by an increase in Electron fixed cost absorption due to an increased cadence and increased average selling price, paired with a favorable product mix within our space systems business. Quarter-on-quarter gross margin decrease was driven by a shift in mix within our space systems business, as our slightly lower satellite platforms business begins to take more share, with initial revenue contribution from our SDA Tranche 3 tracking layer contract. GAAP gross margin increased slightly due to a reduction in stock-based compensation expense related to the timing of vehicle builds versus launches. Review of backlog. So 2.2 billion as of Q1 2026. If you're breaking it down between segments, make sure I'm looking at the right one. Backlog by segment, this is 42% launch and 58% space systems. So it continues to kind of be, it's starting to get a little bit more evened out. I think Rocket Lab's historically been 1/3 and 2/3 split, roughly. So that's interesting to see. And then as for backlog by customer, that is pretty much a dead even split between commercial and government. Sequential backlog increase of 20% quarter over quarter, or $372 million, driven by significant bookings within our launch segment, including 20 launch haste block buy and five launch Neutron booking, partially offset by strong revenue growth from both segments. That's good because that will tell us that I'm not sure what we'll do with the information, but we now know that the 5 launches were booked within Q1, which is it's nice to kind of have on hand in terms of looking forward, so that when we're trying to assess what Q2 backlog looks like, we know that the Neutrons were already tucked away in Q1.
I don't think that they fully count it, because if it's 50 million a launch, it should be 250 million added. Because you remember we asked Adam Spice once that they only count like the non-cancelable part. So maybe like the customer paid a huge deposit on this contract and that they're counting in the backlog, but not the full amount, or?
Maybe. I'm under the impression they might have changed it. They changed a lot of stuff in terms of
that's right. Yeah,
revenue over time versus what was the terminology? I have it written down. Point in time versus overtime. So maybe that has to do with it, but yeah, I'll definitely double click on that later on. Rocket Lab expects approximately 36% of our ending Q1 backlog to be recognized within 12 months, with the remaining 64% to be recognized beyond 12 months. Healthy pipeline, including multi-launch deals and large satellite manufacturing contracts, can create lumpiness in backlog growth given the size and complexities of these opportunities.
And Jacob in the chat giving you props, Scott, saying that you're the only one who understands the breakdown by quarter.
I don't think anybody else obsesses over it like I do.
Hey, we need a numbers guy. That's you.
Yeah, I'm that guy. For review of operating expenses, GAAP SG&A increased sequentially primarily due to a one-time RSU cancellation. That's Peter Beck stuff, right? The
Yeah.
canceling, yeah. Resulting in a large one-time stock-based compensation expense. That's good to know. So we can iron that out as we look forward.
That was your conspiracy theory, right, Vince?
Yeah, exactly.
Non-GAAP SG&A decreased sequentially, primarily due to a one-time benefit related to the reversal of a portion of our 2025 annual bonus accrual. In GAAP and non-GAAP R&D expense increased sequentially, primarily due to continued investment within our Neutron program, paired with a seasonal step-up in payroll taxes. EPS, non-GAAP, free cash flow, and adjusted EBITDA, 1.48 billion in cash and cash equivalents, marketable securities, and restricted cash enables continued investment in strategic growth opportunities. GAAP EPS loss improved sequentially, primarily due to increased revenue contribution, paired with increased gross profit. Purchases of property, equipment, and capitalized software decreased 22.6 million sequentially to 27 million as Rocket Lab had a step down in investment during the quarter for both the return on investment barge as well as the pad at LC3 at Wallops. Negative GAAP operating cash flow decreased 14.2 million sequentially, primarily due to the timing of employee equity transactions and related tax payments in the fourth quarter. Elevated cash consumption is expected to continue, driven by investments in Neutron development and the build out of subsequent Neutron tails to scale the business beyond the initial test flight. Do you guys think that Neutron block order could be synspective? Sorry to go hard left there, but it just came to mind for some reason. I know that they're scaling like massively, and they've signed a bunch of neutrons or electrons in the past. I wonder if that could be them.
Could be.
It wouldn't that would not surprise me at all. I think they've been exclusive this far, or maybe I'm thinking IQPS, but yeah, that's one of those prime examples where I'm just basically waiting to hear like synspective on Neutron. So maybe that's what that was. If not, they better sign soon because it's filling up quick. Adjusted EBITDA loss improved $5.6 million sequentially due to a strong increase in revenue paired with strong gross margin. Cool. 2026 outlook. For 2026, we can expect revenue range between 225 and 240 million. Expect year-over-year increases in both space systems and launch revenue. For GAAP and non-GAAP gross margins, expect GAAP gross margin between the range of 33 to 35%, driven by weaker mix within several of our product lines. And expect non-GAAP gross margin of 38 to 40%. Expect GAAP operating expenses of 138 to 144 million, and expect non-GAAP operating expenses of 120 to 126 million. And then the 12.5 for interest income, 20 to $26 million loss for adjusted EBITDA, and the weighted average shares outstanding of 629 million. Not a bad quarter if I say so myself, guys. How are you feeling?
Yeah, I think it's great. Lots of great, exciting news. Lots of great partnerships. Folks in the chat here saying who's buying more tomorrow? I am. Well, I bought more today and loaded up on calls. So fingers crossed.
You're looking good. You're looking good.
So far, I think we're up 6% in the after hours. So maybe it was a good dip today. I think we got really lucky.
Yeah, I think it's just a testament to show that you can't really judge things on a quarterly basis, right? Like, and I know we're talking about one quarter earnings here, but at the same time, I feel like over the last 1 to 2 quarters, it feels like people felt like momentum was kind of falling off with, the stage 1 failure earlier this year, and a lot of what was kind of going on and transpiring with pushing back to the second half of 2026. People started to give rumors about 2027, maybe not even being possible. It's going to continue to get delayed. And I just think, sometimes you need to just let management do their thing, and obviously they'll come up for air when and if they need it. And once another phenomenal quarter under the hat, and it's a reason why I have almost half my money with Rocket Lab. I mean, I'm
Just half.
true testament. Just half.
Just half.
Isn't
Matt,
the
what do you got
reason
in
why you have half your money with Rocket Lab because it went up so much?
Sorry, what was that?
No, isn't the reason why you have half your money with Rocket Lab because it went up so much?
Yeah, no, it used to be a way smaller percentage of my portfolio, and it's grown so much. And if I didn't believe in the company, I would trim some of it. But why trim it? I still think we're in very early innings, and I think this quarter is another testament to that. And we're far from the end.
Guys, if I go back 3 years ago when we started covering this company, I think that they're doing way better than the bullish of the bullish thesis that I thought, except for Neutron. That's the only thing that I wish Neutron
was here.
Would have, yeah, but it's not a deal. I mean, I understand what's happening, and it's absolutely not a deal breaker.
Yeah, Matt, what is that in your background? I'm gonna be distracted the whole time until I figure out what that black thing is. Is that your chair?
Black thing? What do you mean?
I think it's green or.
Oh,
it's the wall. I'm in the UK right now.
oh, very cool.
Yeah, I'm on business.
Nice.
Haven't you noticed he's been afraid of posting his memes? He's been less funny. He has to behave in the UK.
Yeah,
That's how it works.
I'm trying not to post any memes.
I'm looking at the suggestion of Jacob. I'm looking at the Motive Robotics website. Is that the company we acquired?
Mm-hmm. Yeah.
Yeah, that looks super cool. I like robotic arms.
When was that acquisition again? That's super recent, no?
There's a very interesting video on their website. It shows a satellite with little arms coming out of it for in-space servicing of something. And the solar arrays look like what we've seen with Flatellite. I don't know. I'm excited to hear more about this.
Looks like they got robotic arms for sure.
Yeah.
That's very cool.
It's definitely, if it's not full lenders, it's definitely arms and pieces of lenders.
The video looks like it's coming out of a satellite, though.
Why would you need it on a satellite?
If you're servicing things in orbit, sensors, customizable modules. This one looks like, quickly update your system features to complete visionary. It can repair things, aging or failed modular components. It could refuel. I know we did that one test, right, for refueling, removal of space junk, manufacturing, moving satellites.
Just want to shout out, we have over 1,000 viewers here, so thank you guys for
welcome.
being here. Yeah, that's pretty cool. For the longest time, the counter has not been working on StreamYard, so I don't know if we hit this milestone before.
Hey, it's 2:00. Should we check?
I have the music in my ear all the time. It's
interesting. I'm seeing on-orbit assembly for these arms, satellite servicing.
Yeah, if you go to just product and capabilities.
Exploration of the moon and Mars.
For, was it mechanisms? No. Robotics module link. Yeah, for the robotics module link. Yeah, that one.
I think it's starting.
Yeah, that one. That little video on top. It's pretty neat.
It's starting.
Oh, okay. Let's go. Exciting.
Do you hear, or do I need to?
After the speaker
can hear, yeah.
There will be a question and answer session. To ask a question during this session, you will need to press star
You can barely hear.
on your telephone. You will then hear an automated message advising your hand is raised.
How's it not?
To withdraw your question, please press star 1 again. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, Muriel Baker. Please go ahead.
Thank you. Hello and welcome to today's conference call to discuss Rocket Lab's first quarter 2026 financial results, business highlights, and other updates. Before we begin the call, I'd like to remind you that our remarks may contain forward-looking statements that relate to the future performance of the company, and these statements are intended to qualify for the safe harbor protection from liability established by the Private Securities Litigation Reform Act. Any such statements are not guarantees of future performance, and factors that could influence our results are highlighted in today's press release, and others are contained in our filings with the Securities and Exchange Commission. Such statements are based upon information available to the company as of the date hereof and are subject to change for future developments. Except as required by law, the company does not undertake any obligation to update these statements. Our remarks and press release today also contain non-GAAP financial measures within the meaning of Regulation G enacted by the SEC. Included in such release and our supplemental materials are reconciliations of these historical non-GAAP financial measures to the comparable financial measures calculated in accordance with GAAP. This call is also being webcast with a supporting presentation, and a replay and a copy of the presentation will be available on our website. Our speakers today are Rocket Lab founder and Chief Executive Officer Sir Peter Beck, as well as Chief Financial Officer Adam Spice. They will be discussing key business highlights, including updates on our launch and space systems programs, and we will discuss financial highlights and outlook before we finish by taking questions. So with that, let me turn the call over to Sir Peter.
Thanks, Muriel. Before we dig into the quarter, I want to walk you through what sets Rocket Lab apart as one of the only true end-to-end space companies on the planet. Ultimately, it's our technologies, our capabilities, and our proven execution for the world's most demanding customers. First, our technology. For launch, we have Electron, the world's leading small launcher, alongside HASTE, which is delivering critical hypersonic test launch capability to the Department of War, and Neutron, our medium-lift rocket, tailored to the constellation deployment and national security missions. But launch was just the start. In 2020, we launched Photon, our first in-house developed spacecraft. That moment marked the beginning of our evolution from a pure-play launch provider to an end-to-end space company. In just 6 short years, we expanded our technology stack to include a full family of highly capable spacecraft available at constellation scale. And critically, we also manufacture the subsystems and payloads that go into these spacecraft. This vertical integration means we control quality, schedule, and cost in ways that our competitors simply can't. These technologies have given us a huge suite of capabilities. We provide tactically responsive space launch and dedicated small satellite launch with unmatched flight heritage, suborbital hypersonic and missile defense testing from our defense customers, and national security launch on both Neutron and Electron. Our rockets also deploy and replenish constellations, launch lunar and planetary missions, and more. On space systems, our satellite and subsystems enable communication and connectivity infrastructure, missile warning and tracking, space reconnaissance and surveillance, space protection and space control, astrophysics and earth science missions, in-space manufacturing, and more. Execution is what matters most. Anyone can promise capabilities, but Rocket Lab is actually delivering right now for demanding and complex programs. We're enabling SDA's proliferated warfighter space infrastructure, delivering complete satellites with payloads on aggressive timelines. We're supporting the DoW's Mark TB hypersonic program and the Golden Dome space-based interceptor program. We're onboarded as a national security space launch provider, and we're executing missions for the NRO, Space Force, Missile Defense Agency, DIU, and DARPA. We are a trusted partner for the US and international space agencies, including NASA, JAXA, and ESA. Rocket Lab hardware is flying on Artemis missions, our technology is on Mars rovers and orbiters, we support ISS resupply and other flagship NASA missions. Commercially, we're supporting direct-to-device constellations, Earth observation constellations, lunar landers, orbiters, and re-entry missions. This is execution, real missions on orbit now or in production and generating revenue. When the world's most sophisticated space organizations need mission success, they choose Rocket Lab. We built this technology and capability to serve our customers, but we're also built something more, the ability to deploy and operate our own space-based applications and services. We're one of the only companies on the planet with this capability. This is the next significant opportunity that lays ahead for us. So with everyone up to speed, let's take a closer look how we executed against this strategy in Q1. This quarter has been phenomenal, the strongest Q1 in Rocket Lab's history. We've blown through the ceilings across all of the most important metrics: record revenue, record GAAP gross margins, record backlog, record cash position, and record launch contracts across Electron, HASTE, and Neutron. With revenue, we topped $200 million in the quarter for the first time, up more than 63% versus this time last year, and our forecast has revenue coming in even higher for Q2. Our gross margins are excellent, sitting strong at 38.2% GAAP and 43% non-GAAP. Our backlog jumped to more than $2 billion in contracted revenue across our national security, civil space, and commercial programs, 20% over the quarter and 108% year on year, again the highest it's ever been. That's partly thanks to the record number of contracts we signed in Q1. In fact, with the 31 Electron and HASTE launches and 5 Neutron contracts combined, we booked more launches in the first 3 months of 2026 than we did for all of last year. Overall, we exited the quarter with $1.48 billion in cash and cash equivalents, and currently have secured access to more than $2 billion in total liquidity, giving us financial flexibility and positioning for growth and further M&A. There are more highlights across launch and space systems than we could fit into one slide, so let's go over them in more detail. Starting off with small launch across Electron and HASTE. What a truly exceptional quarter it's been for Electron and HASTE. We booked 31 missions, which is the most we've ever signed in a quarter. Demand for Electron has always been strong, but we're seeing an inflection now across both orbital and suborbital launch. Our customers know when they book on Electron and HASTE, they're buying certainty and responsiveness they need to launch where and when they need to go. We've got more than 70 launches in backlog now, which is a new record. With 8 missions off the pad already this year, we're on track to beat last year's launch record too, as well as we'll hit our 100th launch later this year, the fastest anyone in the industry will have ever done that. It's another record on the books for HASTE with our $190 million 20-launch order through Kratos and the Department of War and Mark TB. This is the largest single order we've seen within the program, and a very clear vote of confidence from the Pentagon in HASTE's ability to deliver the hypersonic test and missile defense capabilities that the nation needs. HASTE now makes up almost 1/3 of all of our launch backlog today. What's particularly significant about HASTE is that along with being the category leader for hypersonics test missions, HASTE's strength has helped us to position us in the center of America's defense architecture for the next big wave of spending. We're already ingrained with spacecraft components and full satellite builds, and when you add HASTE hypersonic rockets to test missile tracking and defense, that's almost the entire spectrum of capabilities covered by Golden Dome. The new era of space primes has begun, injecting pace and innovation into national security and defense. 2 companies at the forefront of this are Rocket Lab and Anduril, and we're excited to confirm that we're teaming up. Anduril has booked 3 dedicated HASTE launches to support missions that combine their rapid prototyping with our industry-leading flight cadence to accelerate tech development for the DoW within months, not years. The first of these launches are scheduled as no earlier than November this year. That's commercial speed and tactical responsiveness in action. While we can't talk program or mission specifics, the main takeaway from this partnership is that it brings together 2 of the defense industry's most innovative prime contractors to advance defense capabilities for the nation. So like I said, it's been a fantastic quarter for launch, but there's plenty to talk about for space systems as well. I'm thrilled to confirm that Rocket Lab has been selected to enable one of the nation's top national security priorities, the Space-Based Interceptor program under Golden Dome. Rocket Lab and Raytheon have been selected to demonstrate advanced capabilities for the Space-Based Interceptor program. This program is an important step in strengthening national missile defense capabilities, and we're proud to be contributing proven expertise to advance the development of solutions for this urgent security need. By now everyone knows we always have a strategic acquisition opportunity up our sleeve, and I'm excited to share the next one. We've entered into a definitive agreement to acquire Motive Space Systems, a Californian-based leader in space robotics, motion control systems, and spacecraft mechanisms. Their technology is featured on the Cadre Lunar Rover and NASA's Mars Perseverance rover. That includes the rover's entire robotic arm, which was the most capable ever deployed on Mars in terms of load capacity, precision, and sensing. Motive also built the zoom and focus and filter wheels for the primary imager for the mission. Most pictures you'll see from Mars come through that camera, and Motive's zoom mechanism were the first ever deployed in a planetary surface mission. This acquisition positions us to play a critical role in future lunar and planetary exploration missions, such as future commercial Mars sample return missions, as well as expand into significant national security programs. It will also bring the design and manufacturing of critical spacecraft mechanisms like solar array drive assemblies, antenna and propulsion gimbals, filter wheels, focus mechanisms, and precision to drive electronics in-house, completing a key element of our satellite manufacturing at scale strategy. We unveiled our new electric propulsion thruster for satellites called Gauss at Space Symposium last month, with a 200-unit production line already established and units delivered to ourselves for some of our own constellation programs. We've been inundated with inquiries from programs in need of hundreds of units each, and we're ready to break the bottleneck on electric propulsion. Rocket Lab is recognised as a world leader in propulsion, so an organic electric propulsion solution is a natural progression for us. And we're excited to bring manufacturing, scale reliability and performance to electric propulsion for the first time in the industry. The pace at which we rolled out new products this year has been relentless. Whether it's been organic or inorganic, what unifies our acquisitions and our internal innovations is a powerful vision, complete vertical integration across the entire satellite value chain. Everything you see on this page, optics, solar, laser terminals, electric propulsion and other components, is already being built to our own platforms or being supplied to others. So that's a good chunk of upcoming missions across civil, commercial and national security have a Rocket Lab logo on them somewhere. With supplier of choice across the industry and other prime contractors turn to us for mission-critical technology. This quarter, we also closed our acquisition of Mynaric, but the real story here is more than just adding optical comm terminals to our national security capabilities. With Mynaric, we've established Rocket Lab's first European footprint to support the German and European space industry on a much larger scale. Our expansion couldn't have come at a better time. The European space and defence market has been accelerating its investments in sovereign space capabilities, up to $109 billion by 2030 by some estimates across the European Union, Germany and the United Kingdom. Rocket Lab Europe gives us boots on the ground to capture that demand, whether it's optical comms, spacecraft build, international constellations, responsive launch, or providing our sought-after subsystems in high volumes. The door is now open to programs, partnerships and revenue streams that weren't accessible before, and Rocket Lab Europe is about positioning the company for what's the next phase of growth in one of the world's most strategic markets. Moving on to Neutron. I'm excited to announce a new multi-launch contract for Neutron that makes up the largest contract in Rocket Lab's history. 5 dedicated Neutron flights plus 3 Electrons between now and 2029 for a confidential customer. It was only a few weeks ago that we announced our $190 million 20-launch deal for HASTE, which was the record at that time. Now we have exceeded that deal with an even larger one. It speaks volumes to the strong and growing demand for all of our launch capabilities, and this booking means Neutron's manifest is filling up fast right through the end of the decade. This market needs medium launch. The demand signal is clear. Equally clear from these continued bookings is that customers trust Rocket Lab and Neutron to deliver this medium launch capability. We've introduced and scaled new vehicles to a reliable high cadence before. We're one of only 2 companies in history that has successfully done this with meaningful reliability, and we're doing the same with Neutron. I hope that by now you know that my stance is not discounting flights just to fill up a manifest, so I can confirm that pricing for these Neutron and Electron launches are very much in family with our commercial rates. Now on to development updates across the program. The team has made tremendous strides on the Stage 1 tank. Design refinements and have improved both the tank strength margins and manufacturability and give us confidence in the structural performance. It's only been 2 months since our last Neutron update, and already we have AFP-made components sitting on the production floor. That's the beauty of automated production with AFP, not just for Flight 1, but also for the fleet of vehicles that come thereafter. These will feed directly into the next round of testing and qualification for Stage 1's tank as we drive towards Neutron's debut. As it stands, current progress is keeping our aggressive schedule towards the first launch later this year. Stage separation tests are also underway using Stage 2. It's interstage and fixed fairing test articles to test a condition as close to flight for how Neutron's first and second stages will separate during launch. Stage 2 deployment is arguably Neutron's most novel capability. Unlike other rockets with stacked stages that separate, Neutron's second stage is hung inside the fairing before it's deployed along its interior rails and out the mouth of the Hungry Hippo fairing. This reusable architecture is one of Neutron's clever competitive advantages. It allows us to reuse fairings without having to deploy separate marine assets to capture them downrange or deal with refurbishment from splashing down them in the ocean. We've cleared separation events at full flight loads on the second stage article and interstage deployment system, which is great news. We're now testing the resilience of the off-nominal separation events. So if you see something broken on the test stand from here on, know that that's completely intentional. For the interstage, that's happening at Middle River right now as the team works on the structures qualification. It's up to the test stand and being subjected to its loads that we should expect during launch, re-entry and landing. Then it'll head back inside the building to be fitted out with its full suite of flight avionics and fluid systems. After that, it'll be shipped off to Wallops to join the Hungry Hippo fairing for further assembly. Another part of Neutron's program that we don't talk about enough, but which is a critical part of its development, is the landing barge called Return on Investment. Now, the photos do not do it justice because this thing is massive. It's practically a launch site of its own. We're talking a huge amounts of power generation, 10 megawatts across its 4 station-keeping thrusters, enough to power thousands of homes. By the time it's completed, it'll be more than 11 million pounds or 5,000 metric tons. So fitting out this landing platform is coming along nicely. Housings for the platform thrusters have been installed, as well as the main cabin and the aft edge of the barge. Its power generation systems and thrusters have arrived to the shipyard in Louisiana and are ready to go in next. And we're on track for sea trials to start later this year. It's one thing to say that you're going to be reusable. It's another to actually make the investments into the landing platforms that enable it. We're doing this now, well ahead of time, so that we can move swiftly into reusability with Neutron as early as Flight 2. And finally, to round out Neutron's development, here's a look at the other significant progress across the program. From the bottom of the vehicle to the top, we've got the Archimedes engines continuing to undergo extensive testing at Stennis in their flight configurations. This is for both Stage 1 version of the engines and for the vacuum-optimized Archimedes that will power Stage 2. It's non-stop hot fires across both test stands as the team really stretches the performance of these engines while running them in the full range of gimbal angles. For the thrust structure, since completing qualification, the team has gotten stuck into fitting it out with all the flight set of avionics and fluid systems. That's taking place at our Middle River facility before it's sent out to the Launch Complex 3 for integrated systems testing on the pad. Stage 2 continues to progress with the integration of fluid systems and avionics. We also qualified its payload support structure, a separate interface on the top of the stage that physically attaches a satellite to Neutron. This payload support structure is another carbon composite structure that's designed to be as lightweight as possible, since every kilogram reduces payload capacity. And having cleared qualification smoothly, it's just days away from shipping out to Launch Complex 3 as well. Then right at the top of the Hungry Hippo, our qualified reusable fairing system has been covered in TPS, or Thermal Protection System, once arriving in Virginia. Integration of the avionics and fluid systems on this part of the vehicle continues as well. So as you can see, there's been lots of Neutron activity lately. I will remind you that, that these comprehensive test campaigns are all being run in parallel, all timed to converge for the first launch at the end of this year. That means a lot more exciting updates to look forward to in the coming weeks and months before the vehicle comes together and goes onto the pad. That wraps up the operational highlights. Now over to Adam for the financial overview and outlook.
Thanks, Pete. First quarter 2026 revenue was a record $200.3 million, coming in just above the high end of our prior guidance range and representing an impressive year-over-year growth of 63.5% and quarterly sequential growth of almost 12%. This strong performance was driven by significant contributions from both of our business segments and underscores the continued momentum across the business. Our Space Systems segment delivered $136.7 million in revenue in the quarter, reflecting a year-on-year increase of 57.2% and a sequential increase of 31.7%. This growth was primarily driven by increased contribution from our satellite platforms business, which continues to perform exceptionally well and provides comforting diversification alongside our robust, but at times lumpy launch business. Meanwhile, our Launch Services segment generated $63.7 million in revenue, up an impressive 78.9% year over year, though down 16.1% sequentially due to fewer launches in the period. Now, turning to gross margin. GAAP gross margin for the first quarter was 38.2%, up slightly sequentially and above our prior guidance range of 34 to 36%, with outperformance driven primarily by solar products and launch, owing to better than expected absorption and lower spend respectively. Non-GAAP gross margin for the first quarter was 43%, while down slightly sequentially, was also above our prior guidance range of 39 to 41%. The sequential decline in non-GAAP gross margin, which was better than expected, was primarily driven by a mix shift towards Space Systems and a modest decline in launch margin based on mix and lower revenue. Relatedly, we ended Q1 with production-related headcount of 1,448, up 250 from the prior quarter, largely driven by a transition of dedicated R&D headcount from the first Neutron test flight to our production teams related to future revenue-generating missions, as well as headcount ramps related to our recent GEOST and PCL acquisitions. Turning to backlog, we ended Q1 2026 with approximately $2.2 billion in total backlog, with launch backlog accounting for approximately 41.5% and space systems representing 58.5%. During the quarter, launch backlog continued to gain share, supported by strong underlying trends as we convert a robust pipeline of opportunities across Electron, HASTE, and Neutron. This includes the 20 HASTE block buy missions signed within the quarter that Pete mentioned earlier, as well as 5 Neutron bookings with a confidential customer. We are actively cultivating a strong pipeline that includes multi-launch agreements, large satellite platform contracts, and an increasingly diverse set of satellite component and subsystem merchant opportunities across government and commercial programs. As noted earlier, these larger needle-moving opportunities can introduce lumpiness in backlog growth, but they are critical drivers of long-term value and scale for the business. Looking ahead, we expect approximately 36% of our current backlog to convert into revenue within the next 12 months. Additionally, we continue to benefit from relatively quick turns business, particularly in our space systems components and subsystems businesses that drive incremental top-line contribution beyond the current 12-month backlog conversion. In addition, as we closed and integrate our new acquisitions such as GEOST, Optical Systems Inc., Monarch, and Motive, they will be accretive to our served addressable market opportunity, backlog, and forward revenue growth rates and margins. Turning to operating expenses. GAAP operating expenses for the first quarter of 2026 were $132.5 million, above our guidance range of $120 to $126 million, driven by the stock-based compensation charge related to Peter Beck's RSU forfeiture. Non-GAAP operating expenses for the first quarter were $105 million, which was below our guidance range of $106 to $112 million. In R&D specifically, GAAP expenses increased $1.7 million quarter over quarter, while non-GAAP expenses rose $1.9 million. These increases were driven by continued investment within our Neutron program, paired with seasonal step-ups in payroll taxes. Q1 ending R&D headcount was 949, representing a decrease of 70 from the prior quarter. The decrease in dedicated R&D headcount is due to the transition of our production teams from R&D cost centers to production cost centers as we begin the transition from the first Neutron R&D test flight to future revenue-generating missions. In SG&A, GAAP expenses increased $11.4 million quarter over quarter, while non-GAAP expenses declined $1.3 million quarter over quarter. The increase in GAAP SG&A was primarily due to the previously mentioned Peter Beck RSU cancellation, resulting in a large one-time stock-based compensation expense. Meanwhile, the decline in non-GAAP SG&A was primarily due to a one-time adjustment of accruals related to our 2025 annual bonus plan, which were ultimately lower than previously anticipated due to certain executive officers foregoing bonus awards for 2025. Q1 ending SG&A headcount was 381, representing a decrease of 4 from the prior quarter. In summary, total headcount at the end of the first quarter was 2,778, up 176 heads from the prior quarter. Turning to cash. Purchases of property, equipment, and capitalized software licenses were $27.1 million in the first quarter of 2026, a decrease of $22.6 million from the $49.7 million in the fourth quarter. This decrease reflects less capital investment in Neutron development during the quarter, particularly for the return on investment recovery barge, as well as the pad at LC-3 at Wallops, Virginia. As we progress towards Neutron's first flight, we expect capital expenditures to remain elevated as we invest in testing, production scaling, and infrastructure expansion. GAAP EPS for the first quarter was a loss of 7 cents per share, compared to a loss of 9 cents per share in the fourth quarter. The sequential improvement to GAAP EPS is primarily due to increased revenue contribution paired with increased gross profit. GAAP operating cash flow was a use of $50.3 million in the first quarter of 2026, compared to a use of $64.5 million in the fourth quarter. Similar to the capital expenditure dynamics mentioned earlier, cash consumption will remain elevated due to Neutron development, longer lead procurement for our SDA programs, and investments in subsequent Neutron tail inventory as we scale the business beyond its initial test flight. Overall, non-GAAP free cash flow, defined as GAAP operating cash flow less purchases of property, equipment, and capitalized software, in the first quarter of 2026 was a use of $77.4 million, compared to a use of $114.2 million in the fourth quarter. The ending balance of cash equivalents, restricted cash, and marketable securities was roughly $1.48 billion at the end of the first quarter. The sequential increase in liquidity was driven by proceeds from sales from our common stock under our at-the-market equity offering program, which generated $450.4 million during the quarter. In addition, in April, we completed the ATM offering by raising another $24 million in cash, as well as entering into a collared forward transaction with a floor price of $474 million. We also have access to capped call transaction proceeds related to our 2024 convertible notes offering, with a maximum aggregated payment of $201.9 million by final maturity in 2029. Putting this together with our cash on hand, we now have access to more than $2 billion in liquidity, resulting from a successful series of capital raises over the last several years conducted at increasingly higher equity prices. In February of 2024, we raised a $355 million convertible bond offering with an effective post-capped call price of $8.04 a share, and followed that with a series of 3 ATM facilities executed at average prices of $26.19, $47.85, and $70.47 respectively. Additionally, under the most recent ATM, we entered into collared forward transactions with a floor price of $63.61 and a ceiling price of $86.11. These funds are intended to support acquisitions in our robust M&A pipeline alongside general corporate expenditures and working capital. We exit Q1 in a strong position to execute on both organic and inorganic growth initiatives and to further vertically integrate our supply chain, expand strategic capabilities, and grow our addressable market, consistent with what we've done successfully in the past. Adjusted EBITDA loss for the first quarter of 2026 was $11.8 million, which was well below our guidance range of a $21 million to $27 million loss. The sequential improvement of $5.6 million in adjusted EBITDA loss was driven by higher revenue and strong gross margin. With that, let's turn to our guidance for the second quarter of 2026. We expect revenue in the second quarter to range between $225 million and $240 million, representing 16% quarter-over-quarter revenue growth at the midpoint. We anticipate GAAP gross margin to range between 33% to 35%, and non-GAAP gross margin to range between 38% to 40%. These forecasted GAAP and non-GAAP gross margins are accounting for a shift mix within our Space Systems business. We expect second quarter GAAP operating expenses to range between $138 million and $144 million, and non-GAAP operating expenses to range between $120 million and $126 million. The quarter-over-quarter increases are primarily driven by the Mynaric acquisition and ongoing Neutron development and spending related to Flight 1, including staff costs, prototyping, and materials. However, we expect to see a shift in spending from R&D to Flight 2 and beyond inventory, which is an encouraging sign of progress as we move closer to Neutron's first flight. Please note that the nascency of the closing of the Mynaric acquisition and the newly announced and yet to be closed Motive transaction, the GAAP guidance figures exclude any to-be-determined impact of purchase price allocation and stock-based compensation related to these deals. We expect second quarter GAAP and non-GAAP net interest income to be $12.5 million, which is a function of higher cash balances, as well as a significant reduction in our outstanding convertible notes. We expect second quarter adjusted EBITDA loss to range between $20 million and $26 million, and basic weighted average common shares outstanding to be approximately 629 million shares, which includes convertible preferred shares of approximately 46 million. Lastly, consistent with prior quarters, we expect negative non-GAAP free cash flow in the fourth quarter to remain at elevated levels, driven by ongoing investments in Neutron development and scaling production, This excludes any potential offsetting effects from any financing activities. In summary, Q1 was another quarter of strong execution. We exceeded guidance and expectations for revenue, gross margins, and EBITDA, all while maintaining robust liquidity to fund future growth initiatives. We expect this momentum to continue, guiding to strong revenue growth as our satellite platforms business continues to scale and Neutron progresses towards first flight. And last but not least, here are some of the upcoming investor events that we'll be attending in the next few months. And with that, we'll hand the call over to the operator for questions.
Thank you. If you wish to ask a question, you will need to press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. We will take our first question. Your first question comes from the line of Andres Shepherd from Cantor Fitzgerald. Please go ahead. Your line is open.
Hey, everyone. Good afternoon. Thank you so much for taking our questions, and congratulations on all the quarter and all the great progress. Maybe one on Neutron and one on space systems. So on Neutron, Pete, I know you talked a lot about this during the prepared remarks, but just maybe to simplify it for us, what are the key items that are pending that, investors and ourselves should be tracking as we get closer to the first launch? And also curious if you can maybe give us some of the customer feedback that you've been getting on Neutron, since you're contracting Neutron missions ahead of that first launch. So just curious on that customer feedback and reception that you're getting. Thank you.
Yeah, hey, Andres. Nice to chat to you. So I guess the key things to be watching out for, the continued, placing of items on test stands, because really, that's the large pieces of work yet to come that have risk associated with them. So as we put these large, pieces of the vehicle on the test stand and take them to their limits and sometimes beyond, then, the completion of those pieces of work is probably the easiest and most visual thing to track. Of course, there's, tremendous amount going on in the background that's kind of less visible, but, for investors, I think that's, it's probably the easiest thing to focus on. And then with respect to customer feedback, I think you can see from, our strategy of just, not dropping our pants and deploying Neutrons at really low prices. We've held our ground there, and the customers that ultimately buy those vehicles, they know us well, and we're very well trusted, and they have complete confidence in both the Rocket Lab and our ability to deliver Neutron. So needless to say, there's also a lot of customers waiting to see it fly. So but the more aggressive customers are making sure that they don't miss out their opportunities to fly early.
Wonderful. No, that's great to hear. And maybe just as a quick follow-up, maybe for you, Adam, on the space systems and on the space-based interceptor program, just curious if you can maybe quantify that a bit further for us, or any granularity in terms of the structure or expectations there alongside Raytheon. Thank you.
Yeah, I'll provide what color I can, and I'll pass it back over to Pete with regards to the relationship of the partnership with Raytheon. It really is, we view it as a partnership. I think everybody's been, had a lot of visibility to what's going on with various elements of Golden Dome. SBI is one of the more visible ones. There's a limited amount that we can really talk about for that program specifically, but we envision it to be a very large opportunity, but there are gates that we got to get through. And as you're aware, this is kind of an interesting procurement process for the government, where companies like ourselves and Raytheon and others that are in the mix have to put some of their own skin in the game to unlock a potentially very large opportunity in the back end. So I'd say the most important thing right now is, are we able to, like we have in the past, bring really quick cost advantage solutions to the market because of our vertical integration capabilities. We'll be able to do things in time frames and cost points that we think few, if any, people will really be able to compete with. So we think we're in a good spot. And I don't know, Pete, you want to provide any more commentary?
I think you've covered it beautifully, Adam. Yeah, I can't really add more to
that. All right, excellent. Well, thank you so much. Congrats again on all the great progress. Looking forward to that Neutron first launch. We'll pass it on.
Thank you. We will take our next question. Your next question comes from the line of Kristine Liwag from Morgan Stanley. Please go ahead. Your line is open.
Hey, good afternoon, everyone. Pete, Adam, there were a lot of moving pieces that occurred in the quarter as you continue to broaden out your capabilities and increase vertical integration. So I guess first, when you look at your capabilities today, are there any areas you are interested in filling in more? And also second, as you continue to broaden out your capabilities, how do you think about the expansion of your TAM, and how should we think about opportunities as you're able to provide more solutions as space as a service? Thanks.
Yeah, hey Christine, great to talk to you. Well, I think you've just seen just a methodical approach here from us. As we continue to expand our TAMs, and what I would say is they're all expanding for a common reason and a common direction, and that's as we've talked about, to ultimately be able to provide services of our own in orbit. So I mean, yeah, I think at this point there's a lot of capability that we've managed to accumulate, both organic and inorganic. And I think we're really at the point where I think if anybody comes to us and asks us to build any spacecraft or satellite, we just sort of shrug our shoulders and get to work. So I think we've brought in-house a tremendous amount of capability, and it all kind of drives towards those end goals.
Yeah, and I would add maybe one more point to that. I think it's important for shareholders. Like a lot of other companies, when they're going to expand into new TAMs or expanding into ones they're already in, they just default to acquiring their way in. And I think this quarter is a great example of us being able to really execute on both sides of the organic and inorganic side. We announced a few weeks ago, as Pete talked in his prepared remarks, about Gauss, our EP solution that we're bringing to market. That's one where we could have spent a few $100 million acquiring a startup and kind of went through all the scaling challenges there, and then probably ultimately came out with a solution that we thought would be inferior. Instead, we dedicated a portion of our engineering team probably an order of magnitude less capital to get it done, and we ended up with what we think is the best solution for the market. So I think when we look at how we expand into new markets, we're not just so kind of focused on just spending shareholder capital to go get it from acquisition. We'll actually be very efficient and go after it organically as well, which we think yields great benefits for our shareholders.
Great, thank you. And if I could follow up on Neutron, you guys talked about that the pricing for the recent deal aligns with your average selling price for the launches. With a smaller backlog for Neutron, can you level set us on how we should think about the pricing for that? And then also, with the maturity or the upcoming launch in the fourth quarter, what's been the customer reception for this? You've got a very strong order this quarter. You noted, higher than what you had last year. So just want to understand the demand environment for that launch as we get closer to 4Q for the first one.
Yeah, thanks, Christine. I mean, look, we've always been consistent about our pricing structure with Neutron, and that remains the same. I think I was burned pretty heavily with discounting electrons and flushing them out of the manifest. It took years, so we're just not going to go down that road again. And then of all of the things that I sit awake at night worrying about, like Neutron demand is just not one of them. And with the backlog we have currently with Neutron, the backlog is super healthy for a number of years. And, at this point, we also need to make sure we have capacity for other customers as well.
Yeah, and I think, Christine, we can also kind of look back historically and look at what happened with Electron pricing. And when we brought that vehicle to market, pricing was, call it $5 to $6 million. And we now see how backlog is priced, with average backlog priced in around $8.5 million, for commercial missions, and some are hypersonics being higher than that. So I suspect that we'll see that same kind of trend present itself as we bring Neutron to market, where we tend to be very conservative up front. We understand the value proposition that Neutron brings relative to what is arguably very scarce competition in the market, primarily Falcon 9. And we think that we'll compare very favorably there and hopefully experience an upward bias to ASP as we continue to kind of gain cadence and credibility with the platform.
Great, thank you very much.
Thank you. We will take our next question. Your next question comes from the line of Erik Rasmussen from Stifel. Please go ahead. Your line is open.
Yeah, thanks for taking the questions. Congratulations on the Neutron bulk order. Just trying to understand, I hear your comments around trying to be, pretty pragmatic and balanced and keeping keeping an eye on your ASPs for that, make sure that you're not sort of underselling that rocket ahead of schedule. But are you at a point now where we could see an acceleration of the signings of Neutron and those Neutron launch contracts, given obviously the strong demand that we're seeing there?
Yeah, I mean, potentially, Eric. I think that will certainly occur after successful flights, for sure. And for a number of reasons, not just customer confidence, but also insurance rates will go down, and all of those kind of things that get factored into launch costs. So and look, we're also always very careful with what we commit. Given that it is a development program, and we don't want to let anybody down. So having customers that have some flexibility in the beginning is super helpful.
Great. And maybe just my follow-up, you spent a little bit of time on the AFP machine, but what are your and it seems like you're making a lot of progress there, but what are your expectations from moving from maybe a single development machine to maybe more of a high cadence production on that?
Yeah, well, the AFP, the single machine we have, fits our production for far into the future. So, at the end of the day, stage ones will be a fleet model, no different to a fleet of aeroplanes. The only part that we reproduce are the stage twos, which we can bang out on the AFP super quickly. So at full cadence rate, we don't see the need to really invest into too much more of the AFP infrastructure. It's well scaled, right out of the chute.
Great, thank you.
Thank you. We will take our next question. Your next question comes from the line of Trevor Walsh from Citizens. Please go ahead. Your line is open.
Great. Hey, gents. Thanks for taking the questions. Peter, maybe for you, on the Motive acquisition, the prepared remarks focus a lot on the kind of planetary exploration, Mars missions, moon missions, et cetera. But then there was a little call out in the slide deck around on-orbit docking and spacecraft servicing. That seems like that could be a really large opportunity. How much is Motive leaning into that right now? Or, what can you just maybe unpack what that specific piece kind of looks like, and if that's something we should kind of be paying attention to at all for that acquisition?
Yeah, thanks, Trevor. So Motive actually brings a really interesting and unique capability. So yes, I mean, we highlighted the Mars stuff because that's extremely unique and frankly very cool. But also basically any actuation and high precision actuation, these guys are literally the world experts at. So that ranges, from like Mars booms and cameras, of course, through to, as you pointed out, like if you want to do some on-orbit rendezvous, we have a very own, Rocket Lab Canada arm, if you will, for that kind of stuff. But also just precision, drive and drive electronics for things like, solar panel rotators and array drives, which is something that typically we've bought, that we're able to now bring that in-house as well. So yeah, it's a unique acquisition in the fact that it exposes us to new opportunities and gives us new capabilities. It also closes, one of the last few, subsystems that we, currently buy externally, and with respect to solar array drives. So yeah, it does a number of things for us.
Great, appreciate that. Adam, maybe just a quick follow-up for you. With respect to the step down in non-GAAP gross margin, both in this quarter and then I think what's implied based on what you're guiding to for Q2, you said that was basically space systems mix entering in. Is that specifically the SDA tranches coming in, or I think that was called out for Q1 as the kind of main driver there, but is that also flowing into what's happening in Q2, or is there some other dynamic that we should be thinking about?
No, you've got that right, Trevor. It's essentially as the SDA Tranche 2 and Tranche 3 programs become more and more of the mix, they come in at lower gross margin, but they bring a lot of scale with them. So if you look at what that does to kind of overall operating margins, it'll be accretive to that. But I think that the other thing to think about too is, we have normal quarterly mix changes. This quarter there's less higher margin launch business, in Q2 than we had in Q1 and Q4. And the launch business, as we've talked about in the past, it's a little bit difficult to predict because now we have a mix of point-in-time revenue recognition and overtime revenue recognition. And I think it's much harder to have a lot of predictability to what that margin is going to be. But overall, we see margins expanding in launch as we progress through the year, as we increase our cadence on Electron. And then as we also have periods where we mix in more subsystems and components business, those typically come at higher gross margins than these large SDA contracts. So, we feel very good about where we're at margin-wise. We think we have a lot of opportunities to continue to drive gross margin increases. So really, but you got to look when you start kind of getting a little bit too kind of digging a little too deep in one quarter versus the next. There's a lot of things that are moving around under the surface. But again, the macro trend is supportive of solid gross margins going forward.
Understood. Appreciate the color. Thanks.
Thank you. We will take our next question. And the question comes from the line of Michael Leshock from KeyBanc Capital Markets. Please go ahead. Your line is open.
Hey, good afternoon. I wanted to follow up on the Motive acquisition, and you mentioned how it brings in-house a lot of the costly and supply-constrained components. You called out solar array drive assembly specifically. For things like that, did you previously buy them from Motive, or did you have multiple other suppliers for components like that?
Yeah, hey, Michael. Yeah, no, we bought them from multiple suppliers previously.
Okay, great. Thanks. And then maybe moving to Electron and just assuming that the demand is there for more launches and the impressive manifest that you have clearly implies that it is. How many Electrons could you physically launch annually? Is there anything that could potentially lead to another step change in the Electron launch cadence or any potential bottlenecks that might be preventing even more of an increase in those launches? Thank you.
Yeah, so when we set up the Electron factory, we designed it for 52 Electrons a year. So we have a capacity to reach there, and there'll be some modest capital investments to reach that, but that's basically it. And we have 2 pads already down at LC1, so that's not a constraint. And of course, we have the third pad in Wallops. So no, I think we're really set up for that increase in cadence, and it would be very, very modest investments to realize that. And then of course, if we went over 52 launches a year, we'll have to take a little bit more real estate and expand the factory, but it's all pretty trivial stuff.
Great. Thanks so much.
Thank you. We will take our next question. Your next question comes from the line of Ron Epstein from Bank of America. Please go ahead. Your line is open.
Hey, good afternoon. This is Alex Preston on for Ron. I wanted to ask on space systems, are you seeing or thinking about, or how are you thinking about opportunities in proliferated GEO and maybe other higher orbits, right? I know the trend has definitely been towards LEO proliferation, but I think in recent weeks we've seen some momentum on contracting activity, particularly seems on the Space Force side there. Is this a space you're looking at, and to what extent could you maybe enter that market as a prime as well, given your current capability set?
Yeah, hey Alex. No, certainly we're interested in that, and a lot of the spacecraft that we build already go to higher low Earth orbits, and they that necessitates an incredibly hard radiation tolerance. So those environments are not dissimilar to GEO. So a lot of the challenges around rad hard and those kind of operating environments we're already very familiar with. So going to GEO for us is not scary at all. I mean, we're happy to go to Mars and operate in those really deep space environments. So a lot of our tech stack is kind of rad hard or rad tolerant already. So we're watching the GEO stuff as well as you are, and I think that is an area we could easily move to.
Great, thanks. And then if I could follow up, I think Christine asked this question similarly, but I wanted to ask more on the national security side. If there are, right, so you've got the capabilities on launch, HASTE, providing satellites themselves to SDA, now adding to that with SBI, are there areas that you could look to expand your capabilities, specifically looking at national security, that maybe areas you can't address currently that you'd like to in the near term?
Yeah, I think one of the really interesting opportunities that the GEOST application brought us is these very bespoke, unique national security payloads. So with that acquisition, I think we were introduced and got exposed to a lot more programs and folks than we would have otherwise. So I think it's a core drive and a core capability within the company, and I think we're in one way or the other, whether it's a component supplier or a prime, we have pretty deep exposure into that national security environment now, as you point out, both through launch and through spacecraft.
Great, thank you very much. Appreciate the color.
Thank you. We will take our next question. Your next question comes from the line of Jan Engelbrecht from Baird. Please go ahead. Your line is open.
Good afternoon, Peter and Adam. Thanks for taking our questions. I'll start with the space systems business. You've announced a lot of updates recently, I think 7 different sort of capabilities in the last 4 months. And then there was the in-house development of key components. If you think of, the Star Tracker in Toronto, the electric propulsion thruster in New Zealand, and then the Mynaric deal. And sort of each of these updates points towards a strategy of expanding Rocket Lab's manufacturing footprint beyond the US, so more of sort of a distributed manufacturing model. Just curious, the thought there, should we expect more of that in the future? Did sort of the disruption of tariffs factor into that, or was it mostly just a logical business decision of being able to serve customers globally in a much easier way?
Yeah, hey, so a bit of both, a bit of all of those things you said, actually. So yes, it's strategic in the fact that, for example, Mynaric really gave us a foothold in Europe, and Europe, outside the United States is like the second largest, market and opportunity for us. So, and also it just sort of depends where the technology is. Like, the Mynaric laser terminals are widely regarded as the best in the business. So if it means we have to go to Europe to get them, that's where we'll go. So, that was just convenient that it was also very strategic for us. But yeah, I mean, we operate kind of, areas of excellence, and, some places it makes sense to do stuff in New Zealand. Some, times it makes sense to do it in various facilities in the States. So, we really look at that quite holistically in that sense.
Thanks, Peter. And then if I just could have a quick follow-up. As we think about the Tranche 3 tracking layer, I think in late December, it was about $800 million. And then in the release, it said there's the potential for subcontracting opportunities to take it up to $1 billion. I was curious, any of the updates, any of the new components that you've announced, sort of developed in-house, and then you've brought Mynaric in there. Is there anything, I know you can't, maybe don't want to talk about exact dollar values, but if we think about future tranches of the tracking layer, is there a ballpark of sort of content that these latest developments could have has increased your ability to serve the other prime customers?
Yeah, so I mean, a number. If we just talk about, some of the transport layer stuff, in some of the track and SDA work in particular, like it, they are all optically linked together. So obviously there's an opportunity there, and they all have high power solar requirements, and there's opportunities there. They all need electric propulsion, so there's opportunities there. So you can see that we can be widely distributed across things. And I like to think of it as like, even when we lose, we kind of win, because if we lose a project, then the next day there's a bunch of purchase orders turning up for solar panels and reaction wheels and all that kind of stuff. So even when we lose, we win. But even when we win, we also win twice, because the same thing happens is we can win the program, and if there's multiple awards, typically there'll be, come Monday, there'll be a bunch of purchase orders for components for other people's systems as well. So that's kind of what you saw with T3, is we kind of won twice.
Great, thank you. Very helpful. Appreciate the time.
Thank you. We will take our next question. Your next question comes from Edison Yu from Deutsche Bank. Please go ahead. Your line is open.
Hey, thank you for taking our questions. Want to actually ask something I brought up a couple of calls ago, and it's in the context of, you obviously laid out today, you have the complete satellite, component portfolio, whole line of different types of satellites. And then, you probably saw recently Amazon acquired Globalstar. And so does spectrum and, these kind of potential services markets in the future, have your views kind of changed over the last maybe 6 to 9 months? Are there certain services that look more attractive, less attractive? The spectrum, your view on spectrum change at all? Just curious your views on that.
Yeah, hey, Edison, great to talk to you. Look, I think we've always been super consistent that, our end goal here is to provide, services from space. And I think that's the largest TAM, and that's where, if you own your own rocket and have your own satellites, you can be most disruptive. And that thesis hasn't changed, but I also think it's a little bit academic to be talking about, us doing services when we still have Neutron in development and things like that. So, it's at the right time. I think we're happy to talk a little bit more about, our thoughts there. But, for right now, the focus is really on, completing Neutron and making sure that we have all the components and everything we need at scale to be able to ultimately deploy, applications in orbit.
Understood. I thought I'd try. And then I guess something probably more, something maybe more, perhaps a little bit more near term or more kind of next couple of years. I think you said it. Your haste, the manifest was like a 1/3 already, or 1/3 of the manifest. You kind of envision, a future where your launch mix is actually becomes, probably like 1/3 haste, whether, let's say, for every, let's say you get 30 launches, 10 of them every year are actually, hypersonic testing. Is that like a realistic scenario?
Yeah, look, it could be. And a part of this will depend on the pace and scale of Golden Dome. Because, one really key critical element of Golden Dome is how do you test it and simulate the threats and all those kinds of things. And this is where we're seeing, a lot of interest in the HASTE portfolio, of course, because you can do things with that it's very difficult to simulate. So I would say that, the scale of HASTE will somewhat depend, or the massive scale of HASTE will somewhat depend on, the scale of Golden Dome and the pace in which that takes place.
Yeah, Edison, I'd also maybe add to that too, that, one of the things that we're seeing is, the international opportunities becoming much more clear and present. I think that also applies to hypersonics, right? I think that the environment that we find ourselves in these days, geopolitically, just is driving, more and more sovereigns to need capabilities that they used to rely upon, the U.S. for primarily. So, again, when you think about the long-term demand for HASTE type of solutions, I don't think you have to think of just the U.S. as the customer base for that. I think it's gonna expand beyond that. Now, of course, everything we do, requires, U.S. State Department approval and cooperation, and we of course work with only the most friendly partners of the United States. But I think there is a bigger opportunity out there than just like Mach TV, for example, and U.S. government opportunities.
Understood. Thank you.
Thank you. We will take our next question. The question comes from the line of Gautam Khanna from TD Cowen. Please go ahead. Your line is open.
Good afternoon. This is Anton on for Gautam. Can you just share some more details on Neutron timing? So based on the way things are trending now, is this more of an early Q4 story or late Q4 story? And then just depending on the timing of the first Neutron launch, is it possible we could see maybe 3 payload carrying launches in 2027? Thanks.
Hey, Gautam, could you repeat the first question? We had a bit of a fallout on the audio on our side.
Oh, sorry about that. Can you just share some more details on Neutron timing? Is this kind of more of an early Q4 story or late Q4 story? And then the second part was just, depending on the timing of that first launch, could we maybe see 3 payload carrying launches in 2027?
Yeah, I mean, I don't think we have enough visibility to nail it down to, a couple of weeks and a quarter. at this point in time. As we approach first launch, it'll be those timelines will become much tighter. And then we've always said our plan is sort of 1-3-5, and that's what we've demonstrated with Electron, and we think that's the right kind of cadence. So that thought still remains consistent.
Got it. Thanks.
Thank you. We will take our next question. Your next question comes from David Strauss from Wells Fargo. Please go ahead. Your line is open.
Good afternoon. This is Ben Tomic on for David. I was just curious, following up on that last question, when do you plan to incorporate the reusability for Neutron, and then how will that kind of impact cadence going from there?
Yeah, no, great question. So on flight 1, we'll be attempting to re-enter and do a soft splashdown for Neutron. So that will test all of the re-entry, engine relights, and downrange burns. This is the area that's kind of the most unknown and the hardest to test for, other than actual flight testing. Hence the reasons for the intentional soft splashdown, where we just splash down in the ocean. Provided that all goes well, and we're happy with what we need to do there, then we'll slip the return on investment barge under it and attempt a landing on flight 2. Now, of course, if we don't get the result that we want on the re-entry for flight 1, then we'll reevaluate and basically I just don't want to put the barge under the vehicle until we know that we're not going to punch a hole through it.
Got it. Great. Thanks. And then maybe going back to PWSA, can you just provide an update on your contracts there, and then how you're thinking about that program at a high level? Have you guys received all the funding for Tranche 2 transport? And how are you thinking about the transport layer going forward with that shift to the space data network?
Yeah, well, I can speak to where we are with the contracts. So everything's on track. We've been hitting our milestones. We've been getting on-time payments from our government customers. In fact, pretty sizable one earlier this week. So no, I think everything seems to be on track there. So I don't think funding is an issue for the programs that we're executing against. As far as the long-term direction for transport layer, I think there's been plenty of kind of press and discussions and a lot of speculation, of course. But I think for us right now, our focus is on executing our tranche 2 of transport, and then of course on the missile track, missile warning for tranche 3. I don't know if Pete, you want to add anything to that?
Yeah, thanks, Adam. I think you've covered it well. I mean, a transport is kind of one layer, but I mean the layer that is doing the work is track. So hence the reasons why we focused very intently on that for the T3 stuff.
Got it. Thank you.
Thank you. We will take our next question. The next question comes from Surid De Silva from Roth Capital. Please go ahead. Your line is open.
Hi, Pete. Hi, Adam. Congrats on the progress here. Adam, I know you talked about the space systems business coming in with the PWSA program, but maybe can you talk about what the mix of launch and space systems how it may trend? There are a lot of moving parts there, I know, maybe hard, but and then gross margin implications of that as you look out the next several quarters, I guess 1 or 2 years maybe.
Yeah. So look, I think that we're clearly going to have more mix in 2026 as we progress through the year coming from space systems. Even though we're going to have pretty significant growth coming from the Electron side of the business as well, Electron and HASTE. I would say that it won't be dramatic. As the mix, as I mentioned earlier, as the mix skews more towards Electron, that's very helpful to the overall corporate margin because that product is really coming into its own, getting very close, or if not at the target margins that we set for that business several years ago. When you look at our space systems business, we mentioned earlier that, these SDA contracts are large and they bring a lot of absolute dollar scale with them, with a little bit lower gross margin profile. But the other thing to take note of too is if we just closed the Mynaric acquisition, that will contribute, if you want to think about roughly $15 million, in this quarter on a run rate basis, and that comes at lower than the space systems overall gross margin because it's a brand new business. I think Pete mentioned on the last call that there's a bunch of work that we need to do there to get that business into fighting shape, in the way that we view kind of Rocket Lab, product lines. we're very excited and very confident we're going to get there, but there's some work to be done. And until we get a few more quarters under our belt and really kind of Rocket Lab eyes, if you will, that system, it's going to be a bit of a drag on margins, but I wouldn't say anything too significant. And we do think longer term that there's no reason why that business can't be at or greater than our target margins for our Space Systems division. So, I think that the other thing that's going to influence this, obviously, once we start to get Neutron in the mix, which is really more of a obviously revenue generating 2027 story onward, that's going to do, we think, very much what Electron did through its maturation, which is start off with challenged gross margins, but then because of reusability and because of our experience in kind of ramping a rocket business, we think that that's got as much, if not better, long-term gross margin potential as Electron is exhibiting. So I think overall, we're not going to see a dramatic shift, I think, either quarter to quarter or even over the next several years. It's going to be more of kind of the progression that we've seen. And I think we've been pretty clear in kind of what our long-term model for the business is, which is, with a strong top-line growth with gross margins at a corporate level, again, longer-term targets of, around 50% or greater, and then delivering, mid to upper 20s operating margins for the business. And I think that, when we look at what's going on underneath, all the various pieces coming together, really the key to unlocking that is Neutron, right? We got to get Neutron's first flight off. We got to pivot that into production. And when we do, there's a lot of very positive things that happen to the P&L. And then, lagging that by perhaps 18 to 24 months is, the strong cash flow generation that will come after we've had the opportunity to build out the fleet of Neutrons, as Pete talked about earlier, where it looks much like, a fleet of aircraft. So we think we've got all the right kind of levers in place. It's just a matter of executing. And again, I don't think you should be expecting any sharp kind of changes to our margin profile. I think it should be relatively straightforward to model. I don't think there are any big surprises that are lurking anywhere.
Thanks, Adam. That was very helpful color there. And then maybe this one's bigger picture for Pete. It could be a bit of a reach because you're not the first company people think about when they think about lunar missions. But Pete, are there any opportunities that Rocket Lab intercepts with everything Jared Isaacman talked about, NASA Impact, that we're not maybe realizing but should, or is that something that maybe is other companies more so than you guys?
Yeah, it's probably other companies than us in some areas. We are obviously a provider of a lot of critical hardware for many of those companies. So for the lunar stuff, I think we kind of prefer to be the picks and shovels behind those missions rather than those headline those missions. It's kind of a bit of a tricky one because typically those programs have been a little bit wobbly in the fact that we're going to the moon. No, we're not going to the moon. Now we're going to Mars. Now we're going back to the moon. No, we're going back to Mars. So I just don't want to get whipsawed and have those big contracts in the mix, getting whipsawed backwards and forwards. For example, where Gateway got cancelled and then the commercial space stations got completely changed and I don't know. It's just those are cool programs, but it's very easily to get whipsawed around. So we much prefer to play a quieter role. Now, in saying that, there's certainly some projects with respect to Mars that we're very vocal about. Mars Telecommunication Orbiter, as I think is one that more recently that we've talked about a lot, and the Mars Sample Return missions. So where we see those missions that have strong proven funding and that are relatively uncontentious from changes of administration and all those kind of things, then we'll go after them. But I'm less keen to chase the shiny things that can be a little bit less certain.
Appreciate the update. Thanks, Pete.
Thank you. We will take our next question. And the question comes from the line of Ryan Koontz from Needham & Co. Please go ahead. Your line is open.
Great. Just a quick question here. Thinking about your recent additions to the portfolio with Mynarch and the gas electric propulsion, first part A is how do you think that improves your competitive position in the broader landscape? And then secondly, your ability to compete financially in the big picture, thinking kind of multi-year, strategic level. Appreciate your thoughts there. Thank you.
Yeah, no, thanks, Ryan. Well, I think some of these acquisitions are just driven by pure pain. If we look back through some of our programs, the things that caused a lot of pain for us were things like electric propulsion. That was, constantly late, constantly expensive, and just not great solutions. And Mynaric was slightly different. Great technology, just always struggled with respect to delivery. So some of these things are just driven from pain. Now, of course, owning those things means that you can resolve the pain, and that puts you in a much stronger competitive position, both from an on-time delivery or faster timeline delivery. And then, of course, when they're all vertically integrated, the cost structure is much more effective as well. So, being vertically integrated and owning these really critical, unique, key pieces of the space ecosystem, naturally gives a competitive advantage.
Yeah, and I'd add one more thing to that. I mean, I think we have a very tangible example of the benefits that it can yield. If you look at our Tranche 3 win that we had for the $816 million, I think one of the main reasons why we think we prevailed in getting an award there is because of our level of vertical integration. And if you look at the margins that we model for that, which are very much in line with our space systems platform business, I think they look quite different than people who won similar awards that aren't as vertically integrated. So, not only does it position us to win because the customer can have more confidence that we're going to deliver, on schedule with performance that we commit to because we own the whole platform or more of the whole platform. It just also puts us in a much stronger position to win financially as well, because we can turn what would otherwise be a pretty lackluster kind of financial profile or program into something that's actually quite strong. So I think it's really important on both levels. First and foremost, strategically enabling us to just execute on programs, and then when we do it, to give it the kind of returns that we and our shareholders expect.
That's wonderful, guys. Thank you.
Thank you. We will take our next question. Your next question comes from Andre Madrid from BTIG. Please go ahead. Your line is open.
Hey, this is Ned Morgan on for Andre this afternoon. Could you guys just size up how much of Space Systems revenue is being consumed internally versus third parties this year? And then moreover, how that could trend over time?
So I think if I understand your question correctly, you're saying what percentage of if you look at a spacecraft that we're delivering, say, for example, to SDA, what percentage of that would be vertically integrated BOM versus third-party procured? Is that what you're asking?
I mean, I guess more so I was thinking about with the electric thrusters, you guys are using those on your, that business line you're building up is going to support your SDA satellites. How much of your internal production at Space Systems is supporting your programs versus others?
Oh, that's an interesting question. I would say, yeah, it depends. Like if you look at our solar business, for example, right? I would say that we don't yet consume a majority of our solar capacity for our internal programs. That's still very much a platform or line of business where the majority of the revenue is coming from other satellite manufacturers that we sell to, like Lockheed and Airbus and others. If you look at things like electric propulsion for Gauss, that's going to be disproportionately internally focused initially because we're going to prioritize that for our key strategic programs. But make no mistake about it, every line of business, every product that we develop is designed to not only meet our internal needs, but also serve the merchant market. So I would say that, yeah, it really depends by platform. Again, solar's low, Gauss will be high. When we think of things like reaction wheels, I would say the vast majority of our production actually goes to third parties versus internal supply. So yeah, there's really no, I'd say, holistic number that I can give you that would be helpful. It's just kind of on a case by case, kind of product by product kind of look.
Okay, thank you. And then one more, just trailing back to how big HASTE and hypersonics in general could be. I guess what would make you decide to broaden your hypersonic offerings beyond just HASTE? I know there's some other programs like Mach XL out there. I was just curious if you have any interest in those.
Yeah, I mean, I think we have kind of interesting exposure across a wide field of stuff. So the HASTE is obviously a very, very specific requirement, and we obviously involved in SBI as well. So yeah, I mean, I think we view it where we can add the most amount of value and where strategic for us. And as various programs rise, we always take a good solid look and sort of make decisions based on on those factors.
Yeah, I think that if I could kind of wave a magic wand and come up with the ideal mix, I would. And I talked about this a few years ago when I was meeting with folks. It was like, if we could get to the point where HASTE represented, let's say, the base business for the Electron platform that got us to our target margins, which was, as we've talked about before, about 24 launches a year. If we could have 24 launches a year be HASTE, that covers really the nut for that business and gets us to absorbing a lot of the overhead, and then everything else becomes gravy and really additive to margin. That would be the place where we'd want it to land. Now, could it get there? I think there's a possibility of that. I mean, this year, if you look at the mix of HASTE launches this year out of our total manifest, it's sitting at around a little over between 20 and 25% of the mix is going to be HASTE. So there'd be a little bit of work yet to get to that, to kind of a baseline of, say, 2 HASTE launches a month. But I would say also, as I mentioned earlier, it doesn't just have to come from U.S. programs. There's a good chance it's going to be coming from lots of different places.
Thank you. We will take our next question. Your next question comes from the line of Jeff Van Rhee from Craig-Hallum Capital Group. Please go ahead. Your line is open.
Hi, guys. This is VJ on for Jeff. Thanks for taking the question, and I'll keep it to one. On subsystems, how are you tracking the progress post-acquisition? Is it how much cost you're able to take out? Is it how much you can increase margins? How much you can scale production? Just kind of what are you looking at there? Thanks.
Yeah, it depends a little bit on the business, VJ. Like some require a lot more work than others. Generally, historically, we've acquired very profitable little companies, and the Rocket Lab Ising, as Adam called it, is relatively limited to Blackwall snack machines and T-shirts versus complete financial restructure. But I would say that Mynaric is certainly one of those that's going to take a lot more work. But consistent to Adam's comments around our financial model, we have very clear gross margin targets, and these business units are run almost as their own little entities. I treat them actually like startups, so they have to come pitch to me for money. They're expected to grow a certain amount every year, and whether they do that through selling more products or creating new products, that's their business. But we very much run them fast and hard and like little startups, and that's worked out really well for us.
Got it. Thanks for taking the question.
Thank you. There are no further questions. I would like to hand back for closing remarks.
Great. Thanks very much, everybody, and thanks for joining us today. And we look forward to sharing more exciting updates in the months ahead. So thanks very much.
This concludes today's conference call. Thank you for participating. You may now disconnect.
So what do we think?
Not bad at all.
Not bad at all.
I think that was awesome. I see a lot of concerns in the chat about stock price action, as I pointed out. Macro stuff, everything seems to be down. We have a new Iran naval escalation, looks like, but I think it's holding up pretty well. We're up 3%, almost 4% in the aftermarket. See what happens tomorrow.
You mean they're concerned that the stock is only 3% up?
Yeah, it dipped down earlier, and they're like, "Oh my God, it's going down." Why? I think the focus is as usual. This company is executing on everything they're promising, and then some, in a very transparent way. So every time they execute, I add.
I would agree with that sentiment.
They should probably just sell the stock if they're upset. It's up.
Is there a new Archimedes video?
Yeah, I posted on X. I sent it to the private chat.
Okay,
let's take a quick look at that. And then we should probably head out pretty quick, guys.
Why? Okay, sure.
No reason.
No, we got plenty of time.
It's so tough with the time zones.
Mm-hmm. Yeah. What time is it for you now, Vince?
It's 20 past midnight.
Mm.
It's gonna be rough. Okay, so let me put the sound on here.
I like the gimbaling. That looks cool. I like it.
You see, this is the sound that was missing from the Gauss engine. Yeah.
It looks clean. I mean, it looks like the engine, a few of the spurious lines and things have kind of been trimmed off a little bit from what it looks like. I mean, maybe close up it doesn't. Maybe it looks very comparable, but I don't know. It looks good. Looks like it should be flying into orbit here pretty soon.
Mm-hmm.
Yeah. Cool. So yeah, I think we need to head out to speak with some undisclosed people. We can do like Rocket Lab, confidential partner with our confidential partners. And yeah, I don't know. Do we want to summarize for people and also let us know in the comments what do you guys think? But if maybe we can go through like everyone, like Scott or Miss Iglesias, and then Matt, and then me.
Yeah, I mean, just a couple high level things that I'd like to pick out. Like, I think the word that Peter used was inundated with what is basically what he was describing as requests for hundreds of thrusters per program. So I think that says a lot. And for them to have that line or the capacity for 200 and basically need them already it sounds like the majority of them are already needed for their own programs, and then they're talking about multiple hundreds of other thrusters. It's just that's going to be a huge business line for them. One other thing so with the whole Peter Beck RSU thing on the call, it sounded like I think the quote was certain management members foregoing compensation. So in
executive
the plural
officers, like
yeah.
plural.
So I guess it wasn't just Peter Beck. I'm not sure what the logic behind that, if that was like tied to Neutron being pushed back or what exactly, but just interesting. And then HASTE being 20 to 25% of 2026 is manifest. So we're probably looking at between 5 and 7 HASTE launches, I would imagine, for the year, which is huge. I mean, I think it's kind of mimicking that Neutron cadence that Rocket Lab keeps talking about for Neutron, at 1, 3, 5, 8, and so on and so forth, up to, I think they said 24 per year, which is like, I don't even know. We've talked about it in the past, but I don't even know what all Wallops can host in terms of different fuel types between vehicles. But it's like either Wallops is going to need to increase their capacity or Rocket Lab's going to need to find a new pad in pretty short order.
Awesome.
Yeah, I can build on that. The one part that stuck out about that HASTE comment that Adam Spice had there quite towards the end was that it didn't need to just be from Wallops. It could be from a lot of different places, I think he stated. And I think that might be a quote. But yeah, the continued UK, New Zealand, Australia alliance with hypersonic testing, I think remains active right now. And so with that, I think you could see potential for the HASTE vehicle coming out of any 4 of those locations, of course, the one location being an LC2. So I'm curious to see what transpires with that. But it's nice to see that, Rocket Lab not having to waver, selling 5 launches for Neutron. I mean, that's a $250 million deal plus. And I don't necessarily think that people are putting 2 and 2 together with a lot of these things. And my anticipation is that once it launches, they're going to continue to see a massive increase in backlog. So it's just really, really exciting to be here. 100 launches is happening this year. That's going to be really fun to be able to keep track of. And it seems like pace is only getting better, and the products that are going out. My biggest fear, I think, just adding, so many positives. Obviously, I could keep going for 20 minutes, but I know, I want to get your guys' thoughts, Ms. Iglesias and Vince, before we check out. My fear is this: they've seemed focused. They seem like they're able to execute. But I know that's always been in the back of Peter's mind, and he's stated it multiple times, as being able to maintain focus. And I can understand that. I can't context switch very well myself, so I get that. I context switch a good bit, and so it's my fear is that that with everything that's kind of going on, that you end up with something that you dilute maybe some of the execution across so many different things. And maybe they're able to succeed. All right, I'm not saying that they won't, but I just know that that's a risk. And so especially right now, when they need to be hyper focusing on Neutron, because Neutron is the next step in the true value unlocker for the rest of the company. So I'm not losing any hope or anything like that, but I'm keeping that in my mind as a risk, because not only do I think about it, but I know it seems like others in the company might be thinking about it as well. But not selling a single share. Excited that the company's doing as well as it is. I'm curious to see what the last 2 of you have to say.
For me, I think some of the things that stood out when they spoke about the Motive acquisition was it really seeming like it's not for lunar, and maybe not even for Mars. Pete said he preferred to be the picks and shovels for these focus areas that seem to keep shifting. Like you said, 1 minute we're going to the moon, the next minute we're going to Mars. But I think that's a right mindset. I think while everybody decides what the priority really is, being able to provide all those smaller components is going to be where we strike it. But I'm very curious to see what Motive is intended for then. Like I said, I thought the video on their website was good, where it shows it being part of a satellite and doing some in-orbit things with it. So that's very exciting for me. The other thing for Raytheon, I was really hoping to hear more about it because I wanted details on the bottom line, it being such a big contract that's being distributed amongst like 6 providers. But it doesn't sound like that's something they're going to disclose. But it also didn't sound like it was going to be something immediately noticeable. They said that currently there's an interesting procurement process where they want to see the commercial aspect of it with skin in the game in order to prove the technology. So I think it is one of those, let's prove that this can be done and done well, and then we can talk about, a big contract, hopefully.
Yeah. Cool. I mean, for me, I have to listen to this again, but at one point it sounded like Adam Spice said that, like our target gross margins, and then he said, and then we will reach the target net margins of 20 to 25%. And that was, I think, the first time that we heard them actually speak about a net profit percentage target for the company. But I just want to make sure I re-listen that's exactly what they said. Then I was a bit surprised because, again, if you extrapolate out the Electron sales, you could go over 100 launches per year. And then Sir Peter Beck was like, we designed it to have 52 launches per year. And then he didn't go like we can expand the factory. He said that it will be a modest investment to reach that, and we have the 2 launch pad, but he said that's what the factory can do. And I would want to follow up on that if they see that there is sustained demand for Electron, like what do they need to do to have more than 52 per year. And then I know a lot of us retail want to know if they're going into the moon, and exactly also what Mr. Iglesias was also pointing out, that he kind of very firmly said that like they just want to be the picks and shovels, and if people need stuff from them, they happily give it, but they don't want to chase lunar. And one thing that I was very interested in is these rumors with Equitas, and if they're going to, you know, announce some partnership. And he was asked by analysts about, you know, the space infrastructure, and he was very dismissive and was like, no, we're focusing on Neutron. And unfortunately, I feel that kind of makes it impossible that there is something happening with Equitas and Viasat, and yeah.
Yeah, it's okay. I was on the fence about that anyway. It's exciting, and we always wondered, are they going to grow their own constellation organically, or are they going to partner with someone? But going into this venture with, you know, this old legacy company, Viasat, I wasn't sure if that was really their vibe or not, but I was open to it. But you're right. I don't think he really had any clues in terms of, yeah, this is happening, or we just can't talk about it. Jacob pointed out in the chat that Sir Peter Beck dropped an Archimedes video on his own account here, and I am loving this one more. The other one was more of a sizzle reel. This one has like a steady cam on this extended burn with beautiful mock diamonds and gimbaling, and it is super, super nice.
You want to share the screen, or should I?
I have it shared if you want to.
Yeah.
Is that Gauss sound you were expecting, Jim?
Yeah.
That looks beautiful. Can you imagine what is it? Is it Neutron supposed to have 6 of these?
Say that again.
How many is Neutron supposed to have of these? 6?
Nine plus 1.
Can you imagine all of those going off at once? I love seeing the gimbal finally. I know this video here is a little pixelated, but if you go to Pete's post, it is beautiful. It's quite long. It's almost 4 minutes in duration. Very impressive.
Wow.
I would say that we're getting close to qualifying that, no?
Yeah. I think we're over qualifying it now.
That's true. He said he wanted to push it beyond its limit.
That's one hell of a hairdryer. Isn't this like a full flight duration?
Close to 4 minutes? I'd say if it isn't, it's very close. It's a silence out of respect for Archimedes. It's great. It would be great to see that live.
Oh my God.
Astra 4 coming soon. No, I'm just kidding.
Okay. Well, always open for competition.
Cool, guys. Okay, I think that we call it the night and we go and speak with our confidential partners. Can you guys stay behind so somebody can tell me when in my morning if it's...
You still got a ways to go, man. I hate to break it to you. You might have to take a nap.
No, that would be good. That would be good. Okay.
Yeah. You have time for a nap then.
So amazing quarter. Thank you all for being here. Thanks for the audience. I think at one point we were up at 1,250, which is a super nice number. So may your stock sky stay blue, your stock stay green. And yeah, see you on Rocket Lab Weekly, I guess.
There's a question, I've seen it several times. Just to answer, is the Q&A is going to be live or it's going to be recorded with our confidential customer? It's going to be recorded. So you will see that come up soon.
Thank you all.
But it should come out in about a day or two. Yeah. Cool.
Thank you all so much.